We're just going into the parabolic part of the S-curve. The time it takes to go from 0 to 10% is the same time it takes to go from 10 to 90%. We're literally still at this point in time where you have Larry Fink radiality, President Trump saying to buy Bitcoin, but your cousin's still telling you to scam coin. 2008 changed everything. The US is running $2 trillion deficits, $1 trillion every 90 days right now. And so we're at this point, like Lynn Alden talks about, nothing stops this train. A lot of people have been attacking MicroStrategy. Michael Saylor's an idiot. He's going to be the most wealthy person in the world probably in the next 5 to 10 years. Of course he wants the price of the stock to go up, but he's playing a different game over a different time frame.
A lot of these companies, they're going to get caught short after the 4th and 5th years.
It can unravel pretty quickly. A lot of people think that MicroStrategy is going to win the whole thing. There's not going to be room for other people. And I think that's a completely wrong take.
Archie.
Mark Moss.
Yes.
Welcome, man.
Yeah, thank you. Thank you. It was fun catching up already.
Yeah, it's really happy to have you here. I mean, you've been in this space much longer than I have. And I guess from day one, like a lot of people, I started watching your videos on YouTube, and then this account just grew so much that I stopped consuming most of it. So it's a real pleasure to catch up with you now and in Prague. Have you been here before?
I have not, no, but I've heard such amazing things. I was happy to come out here, and so far I love it.
Where are you from?
Southern California.
You're still living there? And your journey in this space, when did that start and how'd you get started?
Like a lot of people, I heard about Bitcoin way before I got involved in Bitcoin. So if we go way back, just a super high level, I mean, I started multiple tech companies and had some big exits. So I've sort of always been involved in tech, internet marketing. Bitcoin kind of came across my plate by my business partner back in like 2013. Oh, what is this? We should buy some. And I just remember seeing it go up to like $1,000 and then crash. And I was like, oh, I'm glad we didn't buy it. But I got hit really hard in the 2008 great financial crash. That's what sort of radicalized me. Got me going, shoot, I'm really good in business. I've done really well, built businesses, sold businesses. But what is this financial system I'm not paying attention to that just wiped me out? So I had to go down that rabbit hole. It was kind of like, well, let me figure that out. And so I started buying subscription newsletters, going down the rabbit hole. I figured out, oh, it's fiat. It's this fiat debt-based monetary system. Oh, we need a gold standard. Oh, the situation isn't fixed. It's only gotten worse. The banks are probably going to collapse again. And so I'm sort of dealing with all of that. And I was trying to do a newsletter called Sovereign Man. Simon Black was writing it, this guy James. And it's all about like you wouldn't put all your money in one stock. So why would you have your whole life in one country? And so it's like flag theory. You should have multiple passports, multiple bank accounts. Money's digital, so what does it matter if you have it in Hong Kong or Singapore or Panama? So in 2015, I was in the process of working with one of his attorneys in Panama to get a corporation set up, and I was going to get a residency, put money in the bank account there. And I had the appointment with the attorney. We're going to go do that, and I don't know, somehow Bitcoin came across my plate again. I was like a subscribed to a bunch of just financial newsletters, and I looked at Bitcoin again, and I was like, well, this is the same thing I'm actually trying to achieve, which is get money out of the banking system. I thought the banking system was still going to collapse. So I'd get it out of the US, put it in Panama, still the same banking system. So Bitcoin sort of represented that way to get money out of the system. So I was like, you know what, I'm just going to buy Bitcoin. And I never went through with the Panama thing and just kind of let that fall apart. Bought Bitcoin. Like most people, like once you put a little bit of money into it, then you start kind of paying more attention to it. And as I started digging into it, I just realized like, this is a tool that we can win. Like this is actually something that we can change the world.
Looking for a secure, trusted way to buy, sell, and hold Bitcoin? Gemini has been leading the way since 2014. Founded by the Winklevoss twins to be a security-first, fully regulated Bitcoin platform. With Gemini, your Bitcoin is protected with enterprise-grade security, backed by insurance and Type 2 certifications for SOC 1 and SOC 2. Whether you're new to Bitcoin or a long-time hodler, Gemini gives you the tools to stack sats and build generational wealth your way. From simple one-tap buys to advanced charts and trading features, it's all here. Buy, sell, and hold securely. That's Gemini. Gemini. Bitcoin with confidence. Need cash without selling your Bitcoin? With Debify, you borrow against your Bitcoin, non-custodial, multi-sig escrow, and you keep your keys. No banks, no selling. Just institutional grade liquidity with terms up to 2 years and APRs as low as 9%. All transactions are signed using private keys on your own device. Using a 3 of 4 multi-sig setup, 3 out of 4 keys must approve every transaction, giving you control, transparency, and peace of mind. Whether you're a hodler, miner, small business, or treasury team, Debify gives you the cash you need now without giving up your Bitcoin upside or triggering a taxable event. Get liquidity, keep exposure, and stay secure. That's Debify. Debify, your Bitcoin, your money.
And I'm like a freedom maximalist. Came from a military family. So like I bleed red, white, and blue. And I'm like, we can actually change the world with this. I got to start telling everybody about it. And I just basically haven't shut up since, right? So now it's been since 2015, I've been talking about it. It started with just talking to my friends and family that I thought would be interested. People that were interested in like investing and making money. So not like trying to orange pill the world at first, but just talking to friends and family. And what happened is like word started just spreading pretty quickly that like, hey, Mark is following this whole Bitcoin cryptocurrency thing. And word started spreading. I was answering the same questions over and over and over. So finally I'm like, well, how about I just make a video? So I started making a video. Then I started posting stuff online. And then I fell down the rabbit hole of cryptocurrency. And then I kind of was like, well, maybe it's not Bitcoin that's revolutionary. Maybe it's blockchain, like so many other people. So then I started writing a cryptocurrency research newsletter. So from like 2016 to 2019, every month I published like 25 pages on a decentralized exchange or a new privacy coin or whatever it was, right? Thinking that it was, I'm a tech guy back then. It was sort of like up for like debate, like the race was on, so to speak. And after about 4 years of doing that, going to all the conferences, I used to go to Consensus and all the crypto events and things like that. By 2019, after I published like 1,000 pages of research on every crypto project out there up until that point, it was much easier. Back then, I think in 2017, there was like 2,500 projects. Today, there's 16 million on CoinMarketCap. But after publishing about 1,000 pages of research, I just realized, nah, it's not that. So I was done with crypto, sort of went Bitcoin only from that point. And now here we are.
You mentioned the pain of 2008. Can you tell us about how you were situated financially? Because you'd had some success in the tech space, a couple of exits you said, and how were you positioned and what was it about 2008 that impacted you personally and made you look for another solution?
Yeah. So, right out of high school, I started buying bank-owned real estate. So in Southern California, the banks, there was a massive crash in the early 90s, and the banks were set on all these properties that they couldn't get rid of. So I started taking them from the bank zero down, fixing them and flipping them. Yes, I built up a couple companies, had some big exits, a high-tech medical equipment company, an e-commerce company. And I sort of believed the lie of what most people think is that, oh, we're supposed to get good jobs. We're supposed to save money for retirement. And one day we could have enough money to quit and live off of our savings. And then there's the other lie. If you're really successful, you could sell your business and have passive income for the rest of your life. And so it just seemed like the path was I'm supposed to sell my businesses and go buy a bunch of passive income. And, I'm in my 20s and I had this goal to be retired by the time I was 30. And I was like, okay, like I have these businesses. Some offers came in to sell them. And so I sold them, businesses that I had built, businesses that I knew intimately, businesses in markets that I understood. So it was very low risk. The saying I have is that risk is not in the investor, it's in the investment. So I'm a surfer from Southern California. If someone said, hey, what's the best wave to surf? I'd say, well, pipeline in Hawaii. But like if you've never been in the water, you should definitely not go out there. You'll drown in a second. But yet there's 100 people there every day. So here I am in a very low risk environment because I built the business, I understood the markets, and then I sold that, got rid of all my income and put all my money into real estate because I wanted passive income, into things I didn't really understand, into a lot of risk that I wasn't aware of. So some of the deals, I had a 200 unit apartment building in Atlanta, that went bad, boom, lost like half the money in that thing right there, right? So just went into this high risk environment. And then 2008 came, the great financial crash. And in Southern California, real estate crashed 60% in 12 months. And I had all this debt, so I was covering about $160,000 a month of property I had to carry that couldn't rent for the payments. And like one of my buildings was like a $12 million building. I had an offer for $11 million. I turned it down. It went back to the bank and they sold it for $4 million. Like it was like that, so super fast. And so I found myself no income. I couldn't cover the debt. Property dropped 60%. And, I was basically forced to like liquidate everything I could for as much cash as I could get out of it at that point. And so again, following the mantra of, well, I should sell my businesses, I should buy passive income, I should follow the model, right? And yeah, that didn't work. So that sort of was like the wake up call. And I didn't go to college. I didn't follow a traditional path anyway, but it was sort of like the wake up call, like, man, all this stuff that we've been taught, this pre-programmed track that most people are going down is completely wrong.
I did go to university and I was miseducated, so you're not missing anything on that part. Like they didn't even, so I majored in finance, right? I've got a business degree, and they taught us, this was in 2002. They were still teaching us that banks were intermediaries who took from borrowers to lend, took from depositors to lend to borrowers. And I didn't find out that was wrong for another 15, 16 years. And all through the financial crisis, I'm just wondering what the hell's going on. And it's like, no, they just print the money themselves. Literally, the banks just create credit out of thin air. I had no idea.
Well, it used to be fractional reserve. They just didn't tell you when they pulled the rug out.
So that would have been quite a shock for you to see something that was, you're saying, had a market price of 11, but when it's taken off you, they just don't care. They just want to liquidate it.
So then they sold that building for $4 million. Today I rent that building. So today my YouTube studio is in that building I built and sold. And that building's probably worth $20 million, right? And so then what it made me realize is that there's certain types of events that happen that create massive wealth transfers. So basically my $12 million building got transferred to these guys, a group of Chinese buyers who own it today. And now my $12 million went to them and now it's worth 20. And so I went and said, well, there's these types of events that create wealth transfers. So when I lost my money, somebody else got my money. And so sort of being a little bit of a competitive person, I didn't like that. So then, okay, what are these events that create these wealth transfers where money goes from one group of people to another people? And so I've been studying that for like a dozen years.
And then how did you arrive at Bitcoin from that point? So you've obviously got the pain point of loss, which is how many of us learn lessons. And that's been a great teacher for me in my life as well. Failure has been punctuated throughout the timeline of my life, and finally at a point where I can make something of this, for example, and I've learned those lessons that I've had to come by. So like, how do you take that lesson? First of all, how do you make sure you learn the right lessons from that pain to identify what the solution is?
Yeah. Well, first of all, unfortunately for many, but I would say fortunately for me and for us, success is a horrible teacher. We don't learn from success. We only learn from failure and pain. So the only way you grow your muscles is to break them down. Like we only grow from stress. And so the saying I like is smooth seas never made a skilled sailor. You have to go through the storms to learn how to navigate them. And so while many people look at life as like something that happens to them, I like to look at it as something that happens for us. So that pain I went through, then I was able to learn lessons. So how do we do that? Number one, we have to reflect on that situation. So most people, especially today, we're so busy distracting ourselves with everything, 24/7 news, social media, etc., that we just don't take the time to think. So what happened? Every single day, at the end of the day, I sort of reflect on the day. And some people you've probably heard like, have a gratitude journal, write down things you're grateful for, which is one thing that's very powerful. But I like to think about, what lessons did I learn today? I have to reflect, what did I learn? What went wrong? So in that situation in 2008, what were the things that I did wrong? What were the things that caused me to make those decisions? And ultimately, what went wrong and how could I have mitigated that risk or changed those things? And so you have to reflect, otherwise, you won't pick up on those lessons. And then you have to set out to go, how do I fix those things? So a lot of times most people don't think about risk. But even the people who do think about risk, they go, well, how will I protect myself from banks collapsing? How will I protect myself from the dollar crashing? But then you have to think through like next, second, third, fourth order, which is, okay, if the banks collapse, then what do I think that exact problem will be? Now, how can I mitigate that problem, right? So for me, it was like, well, looks like the banks could still collapse. I still thought that at the time. I don't think that anymore. I thought that at the time. So it was like, well, I should get my money out of the bank. Okay. So if I get my money out of the bank, where does it go? Well, what are my options? I guess I could put it into other banks like Panama, right? So you have to kind of think through, what is the problem? What do I think the risks are? How would I mitigate that risk? If I thought someone was going to break into my house from the front gate, then I would guard the front gate, right? So I think that's how it's done. And like I said, I would just urge people to think about, they happen for us. And if we can learn from those things, then we can grow. But ultimately, it led me, like I said, to try to think about how do I get money out of the bank, which then made me more open to Bitcoin. Because I was on a path to fix that specific problem, sort of like Michael Saylor's talk, you know, he's sitting on $500 million of cash, it was a melting ice cube, where does he put that? So it was like, understand the risk, looking for a solution. And a lot of people in personal development, they love to gain information because they have this hope of like, maybe I can improve my life with it, but they're not actively trying to solve a problem. So the information they receive doesn't really change them because they're not looking to apply that. But for me, I was looking to solve a problem.
That's exactly how I look at it. And it's, I guess, without really having realized it in the depths of the darkest days, was that I constantly focused on the problem statement in search of a solution, rather than, like, I didn't dwell, because a lot of failure can lead one to dwell, be melancholy, despondent, but that's never going to get you out of the situation that you're in. And I just remember in sort of deepest, darkest days, I'd never sort of sat back and felt like I was a victim of anything. It was only, what did I get wrong? What do I need to do next? And so, like, it was always this carrot in front of me that I was chasing, which was success. But it was like, how do I get out of the shit that I put myself into? And I'd always felt like it was actually where I am right now is a personal failure, because I didn't do something well enough. And that was really it. So it's interesting to hear you speak of it in exactly the same way, because I'm thinking, okay, is it just a personal disposition? Because I don't just have a reflexive, natural, positive outlook. No, what I do is, like, I literally look at what I want as a problem statement in search of a solution. So it's fascinating to hear you say the same things, actually. So then, okay, you come across Bitcoin. What were your first impressions of Bitcoin?
Well, like I said, at first it was like, I had seen it as like this like speculative investment back in 2013, saw it running up and I saw it crash. And so my partner brought it up to me, and like I said, I just saw it as like this speculative asset that rose to crash. When I bought it again, like I said, then it was a way to get money out of the bank. And then as I started paying attention to it, I realized because I had become a Goldbug. Here I was, I had this plan at 20 years old, I was to be retired by the time I was 30. Here I am, 28 years old, 2 big exits. I just built this giant house overlooking the ocean, elevator, 6-car garage, married, had my first kid, and I was done. And then I got wiped out. So like I said, then I had to go solve this problem. And here I am telling my wife, like, we got to move out of this house, and I don't even know where we're going to move, and we don't even have any money, and I don't even have to pay for my daughter's birthday, which is pretty painful. I grew up racing dirt bikes. I've broken every bone in my body. I have metal in every one of my limbs. I've broken my back. So part of that is just like, well, that sucked. We try that again. But again, it was then what happened? What happened with the financial system? Why did the market crash like this? How did the banks get over leveraged? So then it was like, I have to go solve this problem. I vowed to myself, vowed to my wife to do that. And so when I started to understand the macroeconomic cycle, understand the banking system, understand the debt-based monetary system, then that led me to go, okay, well then what's the solution for that? And like I said, it led me to gold. Well, I guess sound money would be the solution for that. So then when I found Bitcoin, I realized, well, Bitcoin's actually a better solution. But it was only because I had taken the time to understand the problem and understand the monetary system and understand that a sound-based monetary system would be much better. And a lot of people don't understand Bitcoin today because they don't understand money, which sounds ridiculous because most people use money every day and they go, of course I understand it, but they don't. They don't really understand money. They don't understand banking. They don't understand value creation. And so because I had taken the time to find the problem, go and search for a solution, I think Bitcoin came a lot easier to me. The ability for us to transact without intermediaries, the ability to have a sound money that can't be that can't be inflated or debased, and the ability to then transport that over time and space, instantly. So being the internet guy and e-commerce guy, that made a lot of sense to me as well. And so instantly I just grasped it. I was like, this is the solution to the problem that we need. Again, understanding value creation, we get paid for the value we provide.
So you already understood the fundamental benefits of gold, for example, and it's easy. I'm assuming it was easy for you to sort of transpose those up onto the concept of Bitcoin. But why do you think a lot of gold bugs struggle with that transition and that understanding that this is a digital form of what gold has done for thousands of years?
I think I'm in this straddle gap age. Like, I'm old enough to have lived pre-internet and understand that world.
Do you think it's an age thing? Because then we have guys like, no disrespect to Lawrence Lepard, he's one of our seniors, right? And I mean that with the full love and respect. And then you have, my good friend on Twitter, MicroScope17, he's got more experience on Wall Street than I've been alive, right? So it's no trouble for them to understand the inherent benefits of Bitcoin taking over from what gold used to be. And gold's not over, it still has a very, very prominent position in the macro landscape. Yeah. It's still the dominant asset in the macro landscape. So like, do you think it is age and generational when we do still have these people who, Lawrence has got a tech background like you and an investment background. It's still, my understanding is he still holds precious metals. MicroScope, long experience in TradFi markets, understands Bitcoin. So I'm just like...
So Larry's my partner. We're partners at the Bitcoin Opportunity Fund. I love him, of course. I would say it's not just age. There's certain, you have to have an open mind. You have to be curious. You have to have the ability to catch on a trend. So certainly my dad, he's old and he's like trading altcoins with like bot trading, you know what I mean? So like there's such cases for sure. Sure. But I think generally speaking, you would agree probably most old people just haven't caught up with the internet and the technology.
Oh, sure.
And my kids, when my kids were young, they touched every screen. Just every screen to them was touchscreen. So it is a generational thing, but there are other traits that are required, right?
I guess my mind is drifting to some of the more prominent critics of Bitcoin who are also gold bugs, and they tend to be older. And then I look at, we've got Paul Tudor Jones. He's, what is he, 60s, early 70s? I don't know how old he is, but he looks perhaps in his 60s. Larry Fink has now come around, and we've had a bunch of senior hedge fund managers, legendary investors who have sort of come around. And then we still have, put Peter aside, but we still have quite a lot of sort of gold bugs who are still reluctant.
Look at their arguments, and even Peter's argument. They invited me to go to Mexico City and speak at their mastermind last summer. And I was like, yeah, I'd love to. Like, you've been so instrumental in me, I'll go. And I gave my, Bitcoin talk, and Peter was in the back of the room pacing, and then we had to get in this, sort of debate. And at the end of the day, we broke it all down to his last argument was Bitcoin's only been there for 15 years. Why? Okay, you got it. But candles have been light for 5,000 years before electricity too, right? Things change. So I would say if you take any of their arguments and break them down to their core basics, that was Peter's. Other gold bugs would say, I just don't trust something I can't hold in my hand. And that's maybe the other argument they'd have. And that's sort of like the older generation. I don't trust that. But everything is digital today. That's where I think it's a generational thing. If you really take the time to understand what their core argument is, they can't trust something they can't see, touch, feel. Again, these arguments these are generational arguments.
But do you think it's the same thing with people who are real estate focused as well? Because I guess we have a broader range of investors in terms of age demographics who invest in real estate, reluctant to enter or acknowledge the benefits of Bitcoin. Do you, as a real estate investor, perhaps former real estate investor, do you think the same arguments apply with respect to age?
Well, I think it depends, right? So like Warren Buffett talks about the deal box. So Warren Buffett talks about investing in things that you know. Like he says that diversification is a sign of ignorance. Diversification is saying that you don't know what's going to happen, so I'm just going to buy everything. That's Ray Dalio's argument. Rather, he would say, like Stanley Druckenmiller would say, like, put all your eggs in one basket and watch that basket. So typically, if you want to have success, you need to pick a couple things that you're good at, stick with that. So if you're a really experienced real estate investor, that's your core thing, right? Real estate has a ton of advantages that most people just don't understand. And so if you're smart enough to understand, like, number one, in America, we have 30-year debt. We get a 30-year mortgage at really low rates. And at the rate of inflation, it pays off that debt. So we have really good leverage. We have inflation, destroyed debt. We have the tenants can pay the debt for us. And then we get massive tax benefits for that. So I could buy $1 million building with $100,000 and get $1 million of write-off. So we would want most of the value to be in the building. And then what we would do is a cost segregation study. So we could bring a lot of the depreciation forward. And then Trump, in his first term, and now with the beautiful big bill he's trying to put back through, would be bringing bonus or accelerated depreciation back. So probably not an old building. Like where I live in Southern California, most of the value is in the land. So if I bought, so for me, maybe 30% of the value is in the home, so I don't get a lot of write-off there. But if I bought a brand new tract home in like San Antonio, Texas, for example, 90 or 95% of the value would be in the home, not the land. So that's how wealthy real estate investors look at it as a tool, not real estate. But I would say, I mean, if we talk about some big prominent real estate investors, Robert Kiyosaki, he's a billionaire from investing in real estate. His books talk about real estate, but he's a big time Bitcoin holder. He believes in Grant Cardone, arguably one of the biggest, sort of most well-known real estate investors today. He's now putting Bitcoin into his buildings. I don't know if you've seen what he's talking about. So now he's basically running a Bitcoin Treasury strategy play by taking his new projects and putting part of it into Bitcoin and taking all of the cash flow from the projects going into more Bitcoin. I think he'll have the most valuable real estate company in the world. Probably one of the largest private multifamily real estate investors in the United States, a guy named Ken McElroy is a friend of mine. He was Robert Kiyosaki's real estate mentor. He's a Bitcoin holder. So I don't know if I would say that, right? We see some of the biggest real estate investors buying Bitcoin as well.
Yeah, I guess the people who seem to object to Bitcoin stand out in my mind, and I have a look at what their interests are, and it's always like, yeah, gold's the way, or I'm a real estate investor, or stocks only, and then it's like, okay, I'm curious to like each of these groups. Do they have specific objections to Bitcoin, or is it just the fact that, like you've said, they know an area particularly well, and they just feel uncomfortable being taken out of those waters?
I think, when it comes to business, like say entrepreneurship, a lot of people are like, should I get into real estate? Like I met with I was on a dirt bike trip a month ago. There was a 19-year-old kid, just graduated high school. He's going to college. I was like, what are you gonna do at college? And he's like, well, I'm thinking of either becoming a dentist or an accountant. Okay, those are two wildly different things, but both of those paths will work. You could make a good career out of either. You can make a good amount of money on either. If I want to be an online entrepreneur, should I do drop shipping, or should I start a social media marketing agency, or should I start a podcast? Any of those paths will do.
Yeah.
And so saying back to building wealth, should it be real estate? Should it be gold? Should it be Bitcoin? Any of those paths will do. Now, a smart person would decide which of those paths align with what they want, their values better, which one gives them the most upside. But most people just don't have the time. They haven't put the work in. And I think that's ultimately what it comes down to. You need to put 1,000 hours into Bitcoin.
I guess, if I were to flip that sort of argument, my argument that I was making, there are a lot of people in Bitcoin who don't understand that there are other legitimate forms of investment as well. And so like we're seeing the emergence of Bitcoin treasury companies.
Let's talk about that just for a second though, real quick, because a lot of people in Bitcoin don't understand, right? Mm-hmm. So the most common debate we hear in Bitcoin all the time is Bitcoin better than real estate? And they're constantly comparing. There's endless amount of threads and podcasts talking about Bitcoin real estate. And I think that's the wrong question to ask. The better question is, how do I use both assets to end up with more of both? That's a much better question. So for example, back to real estate's leverage, inflation destroyed debt, and tax efficiency. So let's say hypothetically, I'm in California. In California, we have the highest taxes of the whole United States. At the top of the tax income bracket, I'm going to pay more than 50%, about 52% taxes. Okay. So if I make $1 million, I have $1 million of income I have to write off. Now I could pay tax, and let's just say back of the napkin math, I end up with $500,000 after tax. I buy $500,000 in Bitcoin. Option one. Option two, I have $1 million of income. I take $200,000 and buy $1 million building. And now I get $1 million of write-off.
The leverage available for real estate investments.
So now I have, instead of the $500,000 of after tax and $500,000 of Bitcoin, now I have $900,000 or $800,000 after tax, and I have $800,000 of Bitcoin. But not only do I have the $800,000 of Bitcoin, I have $1 million building. So now I have
Instead of 500,000 Bitcoin, I have 800,000 Bitcoin and $1 million building at the same time. So yeah, it's not either or. It's how do we use multiple assets in different ways and layer them in different ways to build wealth much faster.
Yeah, I think real estate and Bitcoin, as soon as a finance company unlocks Bitcoin as collateral and understands and accepts that Bitcoin is collateral, and then secures both the house and the Bitcoin, and they're going to be the lowest risk loans any finance company can make. The traditional way for a young couple to establish themselves is to save together for a deposit. But that could take many, many years. And until they do save enough for that starter house that they've got, essentially they've got two choices: invest it in something, which is often risky if they go into stocks, but not enough to buy even a smaller house or a smaller apartment quite often. And so for many years, they're just holding cash, which is being debased constantly with money printing every year, inflation, purchasing power reduces while assets going up. But now Bitcoin gives them an entry point into an asset. If they start with $500, immediately it gets the benefit of Bitcoin appreciation. Yep. And if they time that well enough, you essentially have one bear market if you manage to avoid that. But even still, if you have a 5-year time horizon for saving a deposit for your first home with your partner, that suddenly powers your savings schedule. Instead of taking 5 years, or if you do still wait for the same amount of time, you're going to have so much more money as a result of that. Whereas previously, your money's been locked out of the investment process when you're a young couple looking to save up for a house. So I think that's one of the great empowering things that I think a lot of people will slowly discover as Bitcoin becomes more acceptable. Are you seeing more and more financial products that are starting to accommodate that process of young couples wanting to own a home?
The owning the home is an interesting one. It doesn't make financial sense for most people. Well, let's say it doesn't make financial sense. But most of why we buy a house is not for financial reasons. As a father, after 2008, I told you I built the big house, I was done, but then I had to rebuild everything. So we rented for a long time because I didn't want to buy another house when I could rent for way cheaper. I needed to get my investments back up. Eventually, as a father, I didn't like having to move my kids around all the time. So I'm going to buy the house. Yeah. I want the house that my kids can grow up in and whatever. So it was not a financial decision when I bought that. So I don't know if it's the best financial decision for people. That's a whole nother conversation. But I am seeing lots of financial products coming out of this. And as a matter of fact, I'm trying to sort of be the tip of the spear here. So I have made several videos of how you could retire off of Bitcoin. So back to everything we've learned is wrong, right? So this save for retirement, one day in 40 years, I could do nothing and live off my savings. And hopefully I die before my money runs out.
Let's take it from the start. Yeah. Okay, we'll get to retirement. Let's take it from the start. How do we start out with a financial plan to get to that end point of retiring on Bitcoin?
Yeah. So I made a video, and I'm calling it the 5-year retirement. I'm going to write a book about it. So there was the famous book, Tim Ferriss did, The 4-Hour Workweek. Mm-hmm. I'm going to call it the 5-year retirement. And I've done a bunch of videos about this. So basically, to your point, we can get into Bitcoin now, and we have this explosive upside. I think Bitcoin continues at about 50% a year for the rest of the decade, and it will continue down. It'll go to 30% and 20% eventually. But let's say that I think Bitcoin can 10x in the next 5 years. So that means if I have $100,000 today that I put into Bitcoin, I bought one whole Bitcoin. In 5 years from now, that could be worth $1 million. Okay. Then let's say it drops down to 30% a year and then 20% over a couple decades. So whatever, I'm 20 years old, 30 years old, 50 years old, 80 years old. If I wanted to put 100,000 in Bitcoin today, I wait 5 years, it's worth $1 million. I could borrow 10% of that money against it, which would be $100,000. And that money is tax-free to me because it's debt. That means I now have $100,000 tax-free I could spend. The next year, I can borrow again. I can borrow out $200,000 because it went up faster than the rate of debt. And now I could pay off the 100 and keep the 100 for tax-free income again. And the next year I can roll the debt and roll the debt and roll the debt again. I have a calculator people can get for free. If they go to my website, you can download a book on how to do this, and there's a free calculator. And basically you could pull out $100,000 a year tax-free in perpetuity as long as Bitcoin continues going up faster than the rate we can borrow against it.
which I think it will. That's a whole other conversation to get into. So that's one way you can do it. Doesn't really matter the age. Now, could you do this sooner? Sure, if you had more Bitcoin. And it really comes down to how much debt do I want to put against the Bitcoin? I like to use low numbers like 10%. That way we don't get into risk of liquidation and going through bear markets and things like that. But that's how we would start. So one of my buddies, I sat down just a few weeks ago and broke this down. He's got about $300,000 in the retirement account. He's 50 years old. He doesn't really have any income. He's going to want to retire at some point. $300,000 in his stock account is not going to do that for him. So I said, look, take 100 of that, move it over into Bitcoin. In 5 years, this is a plan that you could roll out. So that's how we'd start.
And what's his reaction when you told him that? Is he, because I'm presuming if he doesn't have Bitcoin yet, he's not yet orange pilled. But when you mention that to him, what's his sort of initial reaction to even owning Bitcoin?
His initial reaction was like disbelief, like not disbelief as in he didn't believe me, disbelief as in like, oh my gosh, I didn't know something like this was available to me. This is the plan. I have hope. I should do this. Unfortunately, the follow through has been no follow through. So it wasn't that he doesn't believe me. I mean, he's a friend of mine. He's known me for a long time. I've been talking about Bitcoin since it was $300. So most of the people believe me at this point, right? But yeah, it was like, oh my gosh, I have hope. I can do this. But at the same time, you know, he has taken action. But that being said, the process is not very complicated, especially for a finance person like you. The reality is most people still don't understand that. But like, what do I do about the payment? And what happens if the market draws down? And I don't understand how I can roll one loan into the next. And so I wrote a book and did this thing. I partnered up with Archie Lending, and we created a new product called Velocity, and I've turned it into a product. So basically, how much income you need. Okay, here's how much Bitcoin you have to deposit, and we just give you the tax-free income every day. And I can tell you that we launched this at the Bitcoin conference a couple weeks ago, and we signed up enough people to like double their book. So what they've done in the last 90 days, we doubled it within a day.
Wow.
And that shows you the market's reaction to that, right? The market validated that. So my buddy put him aside. The market understands, the Bitcoin market understands how powerful this is, and they're ready for it.
Well, there's a $2 trillion asset base that's essentially locked up collateral, and it's not really being used. I mean, I don't even know if there'd even be 1 or 2 billion of that currently being used in finance, not accounting for any kind of institutional trading, lending, and all the rest of that. But in terms of, you know, people like you and I who own our Bitcoin, how many of them would be using that as collateral in any way? I don't know. I'd imagine the number's really small right now. So, and that number's only going to rise, right? It's 2 trillion now, but it could be 10 trillion in two years. That's an enormous asset base.
Yeah, they wouldn't because they don't understand it. They don't understand the purpose is to earn money and buy assets and leverage the assets for the life. They just don't understand that mechanism.
But I think amongst Bitcoiners, there's a huge pent up demand to unlock their assets, their Bitcoin assets, and to use them as collateral. I see it as the finance industry who's not ready to accommodate that with products that are reasonably priced and allows us to manage the risk of custody.
I'd love to find out, what do you mean that's reasonably priced?
Well, at the moment, I'm seeing interest rates anywhere from like 10, 12, 11, 13, 14%. I want it to be comparable to consumer finance rates.
So credit cards are 17%?
Not credit cards, to residential property.
So residential mortgages are subsidized by the government.
In the United States?
Yeah.
How can you explain that?
Sure. I mean, the Fannie Mae and Freddie Mac are the 2 largest lenders in the United States, and those are government entities.
Mm-hmm. But how did they subsidize it? I don't understand the pricing.
And FHA is those are government agencies that lend money.
Mm-hmm.
So it's the government lending money to people. It's not private banks.
Sure.
Let me ask you another question. If you had money, if you had dollars, how much would you lend out the dollars for?
I haven't really thought about that.
You're going to want 10 or 12%. If you're going to buy real estate, what type of return would you want? People are getting, 6, 8%. For me, if I wouldn't even consider a real estate deal without 10%. So you're going to want 10, 12%. For unsecured credit, you're going to pay, okay, for real estate, a lot of people would do hard money loans.
Hard money loans are asset-backed loans. They're not credit-based, they're asset-backed, and these are done with private money lenders. You're going to pay 10 to 12% for that, sometimes up to 14 or 15%. So that's the price of money. You're trying to compare government subsidized money to free market money. Does that make sense?
Yeah.
So that's the difference. So where do you see money?
Let me put it to you a different way then. If I'm going to use my Bitcoin as collateral to buy a house, I want it to be priced in the same way that cash deposits are and cash lending is.
Yeah. Let me reframe this for you though. Okay. So what we want, there's the difference of good credit and bad credit, or good debt and bad debt. So bad debt is consumer debt. Bad debt is I paid for a vacation, I got to pay it off the next 3-4 years of dinner, right? Good debt is productive debt that pays for itself. So if I borrow at 5%, but I can make 10%, I have a 5% positive carry. So I think what people get caught in this trap of going, if I borrow against my Bitcoin at 15% and I buy a house, then I have this negative carry. But they don't take into account that the Bitcoin is going up by 50% a year. So I really have a 35% positive carry on that debt.
I look at what else is possible rather than what is only reasonable for me.
Then you should. So if you can get a mortgage in the United States, we can get a 30-year fixed mortgage. My house is locked in at 2.9% for 30 years. 100%, you should take that. Now, one debt is going to be 15% of Bitcoin. The other is 2.9. Take the 2.9. I just bought my daughter just turned 16. I bought her a new car. I put this post up on Twitter and it got blown up. Michael Saylor retweeted it. He said, buy the Bitcoin to finance the car, because I went thinking I'd pay cash for the car, but Ford offered me 4.9% interest. So I'm going to buy the Bitcoin. I'm going to borrow, and I'll take their debt at 4.9. So yes, of course, if you can get to 4.9 from the bar, take that, of course. I just think that when I look at the price of borrowing against my Bitcoin, I don't think that's too expensive, because that's the market price for that type of money. Ford subsidizes the debt.
For the average person watching this, they're primarily interested in unlocking Bitcoin to buy a family home, right? That's what gets the most reaction whenever anyone talks about Bitcoin lending. Sure, you might want to ameliorate some aspects of your lifestyle, but primarily a lot of people want to own a family home. No value judgment on whether that's a good financial decision or not. People want a home, and that makes perfect sense. And so when I look at it as like backed by not only the house, but the loan or the Bitcoin has some kind of auto liquidation feature if you don't maintain the loan payments. So it's like it's a highly liquid asset. The bank has access to it, the financier has access to it as well. And so I just can't think of a lower risk situation for a finance organization or mortgage lender. So I'm like, I want to see the prices of borrowing against Bitcoin in that situation match what's available to people who borrow with cash.
I think the thing that you're just hung up on, and maybe this is a little disconnect here, is it's not about the risk. It's about the price of money. The interest rate is the price of money. So it's not about the risk. So what do I mean by that is that in order for that lending institution to get that capital from the capital markets, they have to pay 8%. And they're going to put 2 points on top of that for their profit. That's just the cost of money. Again, mortgage lenders are able to get much cheaper money because it's subsidized from the government. So what you can do is, for more risk, you can get a better rate. So for example, Coinbase has rolled out a program that's using some smart contract and some like DeFi program to get you cheaper money, and you can get it 6-7% or something like that. Because that money is now cheaper to them because that comes from this DeFi world, but there's a lot more risk into that. So now I gotta trust some like protocols and some smart contracts. And so Coinbase is not going to guarantee that. So I can get cheaper money coming from the DeFi market with more risk, or I can get it from the capital markets with almost no risk, and I'm going to pay a little bit more for that. So I would say it's not about, yes, of course I agree. Bitcoin is the most pristine collateral. They hold it 24/7 liquid. They can cover their debt if they need it. So there's no risk, or very, very low risk there. I agree with you. But it's the cost of the capital that they're paying for that's the problem.
I don't even think we're in disagreement at all. It's just I want Bitcoin to be treated the same way in a like-for-like scenario, because anyone borrowing from a higher cost of capital lender will be paying a higher cost of capital, right? But at the moment, we have people who have cash-backed lending for a mortgage getting better rates than Bitcoin-backed lending for a mortgage. That's all I'm saying. And I know what you're saying at the moment is that people who are lending with Bitcoin-backed loans, they've got a higher cost of capital right now. And what I want to see is that the whole finance industry embraces Bitcoin to the extent where it's treated equally. And so their source of funds to lend to Bitcoin holders is as cheap as what they do to a traditional borrower. Yeah. What do you think the impediments are for that at the moment?
The impediments for that are, I mean, again, it's the people that are loaning the money. And again, if we look at the cheap money that you're referring to, the 5% on the auto loan or the 7.5 or 8% on the mortgage, that's like government-backed money, right? And so it's like, that is just cheaper. I mean, I don't know what the rates are in the UK, but for a mortgage in the United States right now, it's about 8%.
I think they've been coming down a little bit. They've been coming down a little more, last year in the UK more than, JPAL's been holding rates. UK, Europe have been gradually increasing them, steadily decreasing them, pardon me. I wanted to get a touch on to the story with your friend regarding the orange pilling. Yeah. Because you mentioned very early on that, you had quite a reaction from people who understood that you were into Bitcoin. And so, what was the profile of people who were interested in Bitcoin very early on and their reactions to how, about the information that you were sharing? What were their reactions to? And then orange pilling now, as we're sort of getting into more of, I guess, it's no longer the beginning of mainstream. It's kind of like the end of the beginning of mainstream, right? I consider myself as like the vanguard of the mainstream adoption 4 years ago. 2020, late 2020, orange pilled a lot of people with the stimulus checks and whatever. And I came in a couple of months after Sailor in late 2020. And so I think we're beyond that thin edge of the wedge of, S-curve adoption. I think we're kind of past the beginning now. But I'm interested in your experience because you've been in this space much, much longer than I have. Orange pilling at the start, the people who are asking you questions compared to orange pilling now, has that changed in any way?
Man, realistically, I would probably almost say no. I think it's always been the NGU. It's the number going up that brings people in. I put out a tweet that went pretty viral a long time ago. It was basically, people come for the NGU and they stick around for the freedom tech. And it's like, I think most people get interested. And I told you back in even 2015, I was telling friends and family that were interested in investing. They're interested in ways to make more money. And so I think intuitively people understand, like, I have to invest. I have to make money on my money. They understand that. And then they can look at the different options, whether that's real estate, gold, stocks, and they can choose Bitcoin. Bitcoin has a better track record. They'll do that. And it kind of goes back to what we were talking about earlier, sort of on this personal development journey, where most people, they love to learn new information. They feel hope from that new information, but they don't use it because they're not actively trying to solve a problem. And so the problem that most people are trying to solve right now is, I need my money to buy me more money in the future. I need to get the house to a point. So I need to think about my retirement. So I think that orange pilling has always sort of remained the same. What I say about orange pilling is, as I said kind of earlier, the reason why most people don't understand Bitcoin is because they don't understand money. They don't understand value. And more specifically, they don't understand the problem with it. So trying to tell someone like, the government controls our money, the Fed is created by private bankers, like they print unlimited money, like that's just, like they're so far from understanding that it's like, it's almost impossible. So I think it always leads with just NGU, unfortunately. But that's the problem that people are trying to solve.
I think...
what problem were you trying to solve?
With my account?
Well, that the first led you to Bitcoin.
I got into it as a trade.
So you were trying to make money?
Yeah.
NGU.
Got into it as a trade. And then the more and more I stayed in the space and started monitoring, various bits of information analysis, and I'm like, actually, the problems that I'd sort of diagnosed in the economy are all being talked about in this space. And when I mentioned earlier on my miseducation at university, getting a major in finance and not really being told how money was made. That was the missing piece for me, because I didn't understand that banks were not merely intermediaries anymore. They were literally creators of money. And when I understood that there was an infinite.
But why did that matter to you?
It mattered to me because, you know, I grew up working class poor. We didn't have money, and education was a way for me, a pathway for me to get a good job. You know, that was the least risky way when I was growing up to ensure you didn't stay poor. And so to get a good job, I got a good job. I hated the job. Within 6 months, I realized I needed to leave, but I didn't know what I wanted to do. And I had a terrible corporate experience. I hated it, hated the department, hated the business, the politics, the Machiavellian nature of working in a very large corporation. And ever since then, I'd kind of been in the wilderness, not really knowing what I wanted to do. I tried so many different things, and for reasons of my own making and ignorance and naivety, I'd conceived some ideas that I'd fall in love with, but not really understand the risks of how to bring them into reality when it needed to be a commercial enterprise, for example. So sometimes I had a good idea, built the product, ran out of money, right? One lesson. Sometimes I thought I had a good idea, terrible idea, right?
The market didn't validate it.
Terrible idea. And because I'm a very high conviction, high confidence person. And so I fall in love with my ideas. And that was something I hadn't understood about myself until a couple of trips, right, round the way. And so there were all these things that I was learning about myself and about the process of making something a viable business. And, you know, I'd learned the whole business degree way of starting a business. 5-year plans, meticulous cash flow projections, full assumptions, everything. You got to plan everything. You got to have a business plan. I did all that nonsense. And I didn't understand how to manage risk. And combined a lack of awareness or a lack of knowledge in how to manage risk with high levels of confidence, and you can imagine, that's a terrible mixture to have high confidence. And you're not covering your ass because you don't even think to cover your ass. You think, how could this possibly fail? And I'm in an unfortunate position of being blessed with just enough talent in a lot of areas, just enough, not too much, but just enough in a lot of areas, I guess, to feed my ego, you know, and not to think about the downside. So there was much of my life I did not even come to consider what the downside could be because I was so invested in my beautiful ideas. Fueled by my ego and everything else. And then I came to understand that actually success is a highly elusive, precious thing that is completely independent of everything that you can think of in advance. Because until the rubber hits the road, until you put something in the market, there is an infinite number of variables, and you cannot think of all of them. You cannot prepare in advance for all of them. The most you can do is to have enough resources to give you enough runway when you do trip over, and you have to plan with the understanding that something will trip you over. Even if nothing does, you need to have the resources to carry on and iterate when you do, or if you do. I didn't understand that very well. And I didn't understand the whole point of scaling investment like you do in poker as more information comes to hand. And the dumb thing about all of that was I actually knew of processes to manage risk, but it was my stupid ego that made me ignore the knowledge that I'd already come across as being useful in my pursuit of commercial success, like an entrepreneurial success. And so, you know, that's kind of the story in my mind, and I'm conscious all the time in managing this. And now I've been in Bitcoin Archive is 4 years old, and we're only just starting a podcast. It's because the lessons of my failure are seared into my memory, such that despite my ever confident disposition, and the ego, which I'm constantly battling to control, I wanted to make sure that when I did grow, it would be in exactly the way that I described, to manage the risk of anything going wrong.
Yeah.
And so when I do hire people like I have, I manage that duty of care and obligation to them as well, so that, you know, I'm not going to hire them this month and in 6 weeks or 3 months or 6 months, I run out of cash.
Yeah.
We've got money to keep going and then fight another year, another 2 years, whatever it may be. So risk management is something that I've had to learn very carefully, the painful way, to go with my, you know, very strong conceptually, very, very good with planning, very good with a whole bunch of other things that I didn't understand how to pair with risk management to make sure that you survived. And survival was something that I never really gave too much thought to, because failure never entered my mind.
Well, because the world is built by optimists.
Idiots like me.
It's idiots like you. It's like, it's the midwit curve, right? It's like the midwit over here makes the action. The person who's too educated doesn't. And then over here you do. And I think there's a book, it's titled Ready, Fire, Aim. Michael Masterson's worth a read. But it talks about that the business page, the obituary pages are lined with businesses that plan. And so what you're saying is, like, you had this arrogance, this confidence, you were launching products, and then the market told you they were no good. And so what happens is, we don't know. And I always tell my team, like, I don't know, you don't know, the market will tell us. But what that means is we have to get something in the market as soon as possible. As a venture capital investor through our fund, it's something that's changed a lot in looking at businesses that we invest into, because now today with AI and AI tools, no code tools, for example, there's no reason why you can't get a minimum viable product up and shipped within days and test it in the market to see if there's even any interest. Because it's, again, it doesn't, what happens is people plan too long before they test, and it's the testing that gives the feedback. So it's about speed, and you need to have the confidence to succeed, but not the arrogance that you're right. I think those are two different things, right?
That you can only be right.
So I make an educated guess, I throw it out there, and then I see what the market says, and then we quickly iterate. And so then it really comes down to how quickly can I ship and how quickly can I iterate? And most people iterate very slowly, right? So like once a quarter, we sit down, we look at the data, and we change on that, but then you get 4 optimizations or iterations per year. If I do it every month, I get 12. And if I have 12, you have 4, I'm gonna beat you by 4 times. If I can do it every week, I get 52 times to your 4. And so I think that's a big piece of it, you know, moving forward. And we have the tools to do that, you know, today. It's pretty amazing. But I wanted to go back, because you were talking about your orange pill. And so you first got in as a trade.
Yeah, it was a trade.
And then you said that you found out that banks were not fractional lending and they were just printing money. But why did that make you want to buy Bitcoin?
When I graduated and I got my job, I wanted to save for a house, because that's what I thought you did, right?
Yeah.
And
The pre-programmed track.
And I'm like, man, I was living in Australia at the time, and Australia's had just a 30-year charmed run of economic growth. And I think it was really only maybe global financial crisis put a little bit of a bump into that, and then COVID as well. But that was the whole world, right?
Yeah.
But relatively mild compared to the rest of the world, rest of the developed economies of the world. And I just didn't see it. Property prices kept going up. There was none of this sort of 7-8 year cycle of, you know, corrections, if not a recession. You know, there were just no corrections. It might lull for 3 or 6 months, and then it just boomed again. And it's like, what the hell is going on? I didn't understand. In 2008, it still didn't really click that they were printing money, even though I followed that forensically at the time. And it still didn't click for some reason. I have this unique talent for knowing shit and not really embedding it into my actions, right? And until I learned the painful lesson of it, and I'm just in a daydream for the next 10, 12 years thinking, what's going on? And I didn't understand it until it was explicitly daily discussed on Bitcoin Twitter. And I guess then I got into sort of macro Twitter as well. I was like, oh, there's this whole plumbing thing that I didn't understand. And so the reason why it was of interest to me is because it made sense about why I was waiting for this correction in the housing market that never came. Or if it did, it was really short-lived, because I was expecting, oh yeah, it might happen in 6 months, but then the prices will be subdued for another 12 or 18 months. And what ended up happening was, you get a deep correction, but then within 6 months, it's all over. And it's like, what the hell is that all about, right? That was not what I remembered growing up in the 90s. A recession for me was like a really traumatic societal experience. And we hadn't gone through that in Australia, and barring 2008 financial crisis in the UK, during which the Bank of England just stepped in, just like the Federal Reserve did in the United States. That just pumped up asset prices again in quick time, to be honest. And so like, there's a whole generation of people who never got the opportunity to utilize their funds in the most powerful way that previous generations had.
Yeah.
And in a sense, they were robbed of the opportunity to buy housing. Unless you were ready in that 6-month period, you were robbed of the opportunity to buy a house. That we were always promised there would be that chance. Markets go up, markets go down, wait for your opportunity, and then you buy. But actually all that happened was everyone who bought leading up to the peak, they were rewarded by central banks who said, don't worry, you haven't made a mistake. We'll just pump up the asset prices again.
So you came for the NGU, it was a trade.
Yep.
Then you learned about that the banks just keep printing money, and then you learned more about the mechanism and realized that I really need NGU.
Definitely.
So really it's all NGU.
Well,
right? At the end of the day.
Bitcoin is not that much without NGU.
Well, it is when you understand that the societal impact of inflation and the cost of living going up without wages increases. So for example, on the website, WTF happened in 1971, right? It's all full of charts. But when you look at, most of the charts are like the cost of living going up and real wages and the gap between income inequality and those types of things. But as you scroll farther down, you'll see the societal impact of that. So for example, in 1971, the incarceration rate shot up. The divorce rate shot up. The unwed mothers shot up, right? And so that's the societal impact of it. So to your point, it's all NGU, but what is the societal impact of NGU or not having NGU, for example, right? So
what I meant by that is number go up is a validation of Bitcoin's properties. And if number wasn't going up, it would be an invalidation of Bitcoin's properties.
Yeah, but there's other ways too. So for example, after the United States disastrally pulled out of Afghanistan, when President Biden was in charge, that was a disaster. The lady that cuts my hair in California, she's from Afghanistan. Her family killed her when she was a girl. And she was like, man, I'd really love to help some of these women out in Afghanistan. I still know some women back there, but I have no way to send them money because the Taliban has taken over the bank, right? And I'm like, well, why don't you just send them some Bitcoin? She's like, oh, I didn't know that we could do that. So for her, it was the censorship-resistant properties of Bitcoin, not the NGU. You've heard like Naomi Park's story coming from North Korea and how in North Korea they're not even allowed to have money, and then they regularly search the houses to find people who are stashing money, and so Bitcoin is a way for them to save. So there are certainly instances and places in the world where it's not just NGU, it's like censorship resistant money or immutable money, things like that. But for most of us in the developed world, it's NGU.
I totally agree with that. But if we separate the monetary values of Bitcoin from the payment network and just look at the payment network, the utility of the payment network is not unique to Bitcoin. Like right now, we have examples on Twitter of people using all sorts of other means to transact with people in Iran, in Gaza, where otherwise they may not be able to. And those are people who are interested solely right now in an acute scenario of getting value across the world, right? And so like the beauty of Bitcoin is it combines both of those. Whereas if you're only concerned about money transfer as a payment network, there are other things that people are using right now. They're not using Bitcoin. They can use Bitcoin, but they have other options if that was the only thing that you wanted to use. But whether or not they'd be able to persist under attack is a different scenario, right?
And that's the key point. And so to understand Bitcoin is very difficult, and you have to understand a lot of different disciplines. So you have to understand money, obviously. You have to understand the history of money. You have to understand economics. You have to understand those things. But you also have to understand technology. And if you get into the technology side, I told you, I wrote 1,000 pages of research on all the cryptocurrencies that were out there at the time. And once you start to understand the technical details of why Bitcoin is different than the other ones and why censorship resistant is an option for Bitcoin and not really for other cryptocurrencies, you can start to understand, Bitcoin's unique proposition. But to the point that you're making, if the world isn't openly attacking those today, most people don't see that. So like, I'll just use XRP, or I'll use Ethereum, or I'll use Cardano, or I'll use whatever, because they all basically work because I don't understand the technology side, which is if governments tried to attack it, the other ones would fail, those wouldn't. And that's important because if you want to have the proper allocation to Bitcoin, you have to have the proper confidence. And so if I haven't studied all of these factors, including the technical side, then I don't understand why Bitcoin will survive for much longer than the other ones. And then I don't make the proper allocation to it, and I'm underinvested, et cetera. But it's difficult.
And then I want to make the point where Bitcoin is truly decentralized and truly censorship resistant. You can literally use it while the most adversarial government is watching and trying to stop you, and they can't stop you. And the same can't be said for all the others because they're not truly decentralized. Like if the United States government or any adversarial powerful government was watching and was intent on stopping you from transacting, they will do it. But they can't do that with Bitcoin.
Right. And most people don't understand that because they haven't put the time into it, nor is that attack there. The other thing is then we also have saleability. So we need money that's accepted everywhere. Last summer, I took my family to Europe, and as I walked around Italy and Greece, a lot of the money changers there also took Bitcoin as well. Yeah, I mean, I saw it very, very common, right? But I didn't see signs for Cardano or Ethereum or whatever, XRP. They didn't take those, they took Bitcoin. So I think if you are going to send money, it needs to be maybe a stable coin, which seems to be pretty relevant, right? That's a good intermediary. I think that's pretty powerful. Or Bitcoin that, is accepted most places in the world today.
Well, now we're talking about orange pilling, and in particular, when you said, you've got to know to understand Bitcoin, you've got to know about this, 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 and this. And I'm like, yeah, but if you put that in front of someone right up front, that's such an impediment for someone. So how do you overcome that? How do you simplify the message to hook? Yeah. I mean, we've spoken about number go up. That's one thing, but number go up, how do you position that in a way that solves a problem for them? Personally, I've used inflation. Everyone's understood inflation for the last 4 or 5 years. Yeah. And that's been a hook that's quite effective, and instantly it literally does hook them. They understand that the cost of living has gone up.
Yeah, have you seen the movie Wolf of Wall Street?
Yeah.
So the famous sell me this pen, but do you know how to sell a pen?
I've never really thought about it.
Okay, so this is sales 101, and this is where everybody gets it wrong. So what happens when you get into sales, everybody makes this mistake in the beginning. In sales, it's called like spilling your candy in the lobby, or more gross is like throwing up all over the customer. So what happens with a new salesperson or someone trying to sell you the pen would be like, you need this pen because it's a good pen and because it writes smooth and it's got the right ink and blah, blah, blah. They're going to tell you everything about my product, my company, and why you should buy it. My company does this, and my company does this, and my product's the best because of this, and we beat our competition, da, 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 da. And you're the customer just like, I don't care about that. So that's like me telling you about Bitcoin. It's censorship resistant, it's immutable, it's only 20 million, da, 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 like, and you don't care about that. It's like this barrage where you're just like overwhelmed. The way you sell the pen is by saying, I don't even know if you need a pen. Why would you even need a pen? And you're like, well, sometimes I have to sign contracts in ink. Oh, you sign contracts. What kind of contracts do you sign? Well, for my company, they're really high value. Oh, are you typically with like big executives when you do that? Yeah. What kind of pen do you normally sign those contracts with? Would having a better pen add more prestige to that moment? Okay, then would it be worth having a better pen than just a Bic? Okay, right? And so what I'm doing is I'm asking you questions. I'm not trying to sell you anything. What I'm trying to do is ask you questions to understand what's important to you. So I'm not selling you the pen. I'm trying to find out what your problems are and if I can solve those. So Bitcoin will be the same way. What kind of problems do you see in the world today that you're concerned with? Do you see the unwed mothers being a problem? Do you see that people in Afghanistan can't get money? Do you see that people are falling further behind and they're getting priced out of homes? So what is the problem that you see in the world today? What's the one that's the most important to you? Okay, now can I match the one product or the one benefit of my product to solve that one problem you have? So if I can find out the most important problem to you, so you said I lead with inflation because most people are affected by that, but I wouldn't even lead with inflation. I would ask you, what's most important to you? And then you say, well, inflation is the most important. Okay, then why is that important? What does that cause for you? Okay, now let me show you how this benefit can solve that problem. So it's a sales thing, it's a marketing, it's a messaging thing. And I think that's the right way to do it. We were given 2 ears and 1 mouth, and right, we're supposed to ask, we're supposed to listen more than we talk. And so it's really about discovery. It's really about understanding the customer as opposed to just flooding them with a bunch of stuff.
I think there needs to be a Bitcoin orange pilling 101 video masterclass. I'm dead serious about this because I think almost everybody in the space, at least in how they express themselves online, it's all about trying to information dump on a poor person, often laced with ideology, often laced with value judgment, whatever, rather than an exploratory conversation and question asking to see what their problems are and relate it to the person where they are in their life, rather than trying to impress them with how much we know and how based orange-pilled we are. I think there really does need to be something that's sort of rooted in the principles of Sales 101, but customized for Bitcoin orange pilling. Because I haven't seen anything like that. Maybe there is, but I haven't seen anything like that. And I think, Mark, you'd be great.
Well, if I
you put something together like that.
If I might plug my own YouTube channel, I mean, I think that's what I try to do. If you go back to, I started my channel in 2018.
Of course.
So you can just go to the oldest videos and see the first 4 ones are Bitcoin this, Bitcoin Wall Street, Bitcoin this, and for, Bitcoin's going to do this, Bitcoin, and it used to be Bitcoin, Bitcoin, Bitcoin. Today, it's more like, talking about, hey, the Fed is going to do this. Here's what's happening with inflation. Hey, here's what's happening with supply chain. So I'm bringing up problems. And then towards the end of the video, it's like, here's how Bitcoin fixes that.
Yeah.
So now, if you look at most of my videos don't say Bitcoin in the title. It's more like, hey, the Fed is going to do this, watch out. Or, hey, and it's more like each one is bringing up a specific problem that one person will identify with. And then Bitcoin is always brought in as a solution to that. So because I can't interview somebody to ask them, basically each video is talking about something that's going on that's a problem that maybe somebody's concerned with, which is why, an average views, 150 to 200,000 views per video right now. But people resonate with the problem, and then Bitcoin is brought in as a solution to that problem.
I think that's where we're at.
Yeah.
And
I used to tell Peter McCormick, there's hunters and farmers. So Peter McCormick ran What Bitcoin Did. And only if you're already into Bitcoin will you watch What Bitcoin Did, or like BTC Sessions, amazing channel. Ben's a good friend. But only if you're into Bitcoin will you watch that. So those are the farmers. They're cultivating Bitcoiners. I'm like a hunter. So I'm throwing problems out, hooks, and then trying to bring people in and hook them into what Bitcoin can solve for that.
That's definitely where we're at in my view, regarding the adoption cycle. But I want to talk to you, I want to ask you about the adoption cycle. Where do you think we are at the moment? I mean, I've already expressed that I think we're past the beginning of mainstream adoption. I think Wall Street has pretty much fully embraced it with the green light from the White House. And it's only a matter of time, I think. I think the Democrats, if they're smart, they will get around it and drop their objectionism to it. And once that happens, I think with Wall Street fully adopting it, the donor base will clarify their messaging to the Democrats as a result. And I think we'll have bipartisan support for Bitcoin in the United States. That will then accelerate mainstream adoption. How do you see where we're at the moment? Do you agree with my assessment that we're past the beginning of mainstream adoption? And how do you think it will progress from here?
Yeah, so there's a few ways that I think we could look at this. So like number one, I think that's generally correct, but I think there's like more detail we can overlay into that. So I'm pretty well known for talking about big cycles that happen. For about 5 years, I've been talking about them. Bitcoin Mina in Abu Dhabi a couple months ago, I broke it down where we're at with Bitcoin's price overlaid with cycles. Here, Bitcoin in Prague, I'm going to talk about it as well. But we have about every 50 years, we have a technological revolution cycle, a K-wave cycle. I call them a quantum wave cycle. But for the last 300 years, about every 50 years, we have a new cycle that happens. Industrial revolution, steam engines and railways, steel, heavy equipment, electricity, oil, automobiles, mass production. 1971 was microprocessors, personal computers, telecom. And now here we are 50 years later, having another one. When a cycle repeats 2 or 3 times, it's likely to happen a 4th or a 5th. When it happens 4 or 5, it's going to happen, right? Here we are the 6th time. Now, each one of these 50-year cycles has this repeatable process that happens, mostly because of human nature. And so there's 4 distinct phases of this 50-year cycle. So Bitcoin is leading what I call the decentralized revolution, which is this new 50-year cycle that we're in. And we're about 14 years into it, or going into phase 2 of that right now. Now, there's a bunch of ways that we can look at technology. One is this 50-year cycle, the 4 phases. The first phase is what's called the eruption. So this is when the new technology was created, and there's a lot of attention brought on by that, a lot of speculation. But this is just the beginning. This is the nerds. This is just not even the true believers yet. Then as it goes up, you can overlay, I'm sure you've seen the diffusion of innovation, which is a bell curve, and you've sort of referenced it before. So you have the true believers, the innovators. Then you have the early adopters, and then there's something called a chasm. And then you have the early majority and the late majority, right? So that's like a bell curve. And so I think we're past the 2 phases. We're about 15% adoption. We're going through the chasm right now. The chasm is where something has to psychologically change for the early majority to start coming in. And I think that's the adoption by the governments, by the institutions, the Wall Street institutions that are making it legitimate. So we talked earlier about sort of like the boomers who like, I don't know if that's true. It's probably a scam coin, something like that. I mean, we're literally still at this point in time where you have Larry Fink, the largest asset manager in the world, saying to buy Bitcoin, and Ray Dalio, the largest hedge fund in the world, saying to buy Bitcoin, and President Trump, the president of the free world, saying to buy Bitcoin, but your cousin's still telling you it's a scam coin. Like, it's kind of weird because your cousin ain't smarter than those 3 guys.
Not only that, really sophisticated financial managers, like all the hedge fund managers we just spoke about, Druckenmiller, Paul Tudor Jones. Right. I mean, we can list up probably a dozen of them that are very well known.
Your cousin still thinks it's a scam. So we're crossing the chasm right now, and then the early majority and the late majority will come in. So I think that's where we're at in the cycle. Now we can take that diffusion of innovation, we can overlay that to this 50-year cycle, and then there's also, in technology, we use something called an S-curve. And an S-curve measures how fast the innovation gets diffused out to the public. And so the way an S-curve works is the time it takes to go from 0 to 10% is the same time it takes to go from 10 to 90%. 80 to 90% is typically considered full adoption. Still some people that don't use the internet today. So where we're at, I believe, in this 50-year cycle, we're just going into phase 2. We're about 14 years into it right now. Overlaid with the diffusion of innovation, we're just crossing the chasm right now before the early majority comes in. And when you overlay that with an S-curve, we're just going into the parabolic part of the S-curve. And we can see this through a lot of different ways. That's how we measure technology. But now let's talk about, like you mentioned, the politics, right? So Bitcoin has done what it's done in spite of being attacked by governments, in spite of the Biden administration's, Operation Checkpoint at 1 and 2.0, for example. It's done all of that in spite of that, with massive, what we'd say, headwinds against it. Now those headwinds went to tailwinds. Now we have, you mentioned, left and right in the government. I would just look at it a little bit differently. We have the full government backing at this point. I mean, SBR, a sovereign wealth fund, Trump himself buying Bitcoin, the states, et cetera. So we've gone from a headwind, and now we've gone to a massive tailwind, pushing it farther. At the same time, what happens is in the early 2 stages, because it's a retail move, we have people with thousands of dollars or hundreds of thousands or millions of dollars coming in. Today, we have billions, tens of billions, hundreds of billions coming in. So we've gone from small checks to big checks. We've gone from illegitimate to legitimate. We've gone from massive government headwinds to tailwinds. And that's what pushes us up into the parabolic part of that S-curve. And so I think over the next 10 years, we'll go for 90%, 80% adoption, which is a massive parabolic move. I think there's a couple of things that I think also are worth noting in that. There's a lot of talk about like where we are in the 4-year cycles and if we're going to get another massive drawdown. And there's never been an asset that would go up or down in a straight line. So everything moves up and down. It's volatility is what I call the difference of perception of reality, perception and reality. And so it goes up and down like this. But I think what happens is, number one, as the asset gets bigger, the volatility gets dampened because it's much harder to move a $2 trillion asset than a $500 billion asset. But I think what's also happening is we're getting a change in the makeup of Bitcoin holders. So because of the way technology works, in the beginning stages, it's retail driven. And what happens with retail is, as we already discussed, most people don't understand what it is or why they're buying it. And so because humans are motivated by pain and pleasure, stupid animals, as it's going up, people are making money, pleasure, pleasure, pleasure is coming in buying it. And as soon as it rolls over, pain, 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 they sell, sell, sell. And that exaggerates the volatility of that asset. What we're seeing right now is a massive transfer of wealth, unfortunately, from retail to institutional. And it makes me sad because I want the people to benefit from this, but it's all going to the institutions today. Now we have not just institutions like, obviously the ETFs, for example. There's pension funds, all that stuff buying Bitcoin, but also now we have the Bitcoin Treasury companies, right? And they're massive buyers. Right now, 72 public companies make up more than 3.5% of the supply of Bitcoin. And that is going into deep, dark, cold storage. So we've gone from speculative retail that buys at the top and sells at the bottom to now deep, dark, cold storage from institutions and these funds. At the same time, we've gone from $1,000 checks to billion-dollar checks. So I think we're going into more of that parabolic part of the S-curve, which then makes the price movement more asymmetric. I think we'll see more upside than we see a muted downside because we're seeing bigger checks coming in, pushing it up higher. But when the market does roll over, we won't see as much selling. And I think the selling gets muted. I'm not saying it's not going to go down again. Of course it goes up and down, but maybe we still get the same upside volatility, but maybe instead of an 80% drawdown, it goes down to 50% or something like that.
Yeah, I'm still not, I'm not sure of what's going to happen with the price other than long-term it will go up. But in terms of the shape of cycles, which are probably over for now, I don't think we're going to follow 4-year cycles anymore. I think the last bull market came early and this one we reached a new all-time high before the halving. So I think there's something breaking down in the cycles there. And then we've seen this prolonged sort of bid that's had the Bitcoin price sort of going up in almost an orderly channel where we'd see a 6 or 8 week burst of price appreciation and consolidation for 6 to 9 months. And that's repeated so far for 2 years. And it remains to be seen whether we continue following this in a similar vein to what happened to Amazon. I mean, Amazon still had 40, 50, 60, 70% drawdowns, but they were short-lived. They were not these long 12, 18-month bear markets. And I wonder whether we just see this great march up over 10 years or so for Bitcoin to be repriced like Amazon was.
Yeah, but even Amazon didn't go up straight line. It didn't have the big 80% drawdowns. Yeah,
and it didn't have the parabolic runs that have punctuated the last 3 or 4 bull markets that we've had. And so I guess the only thing that I can say is if we don't get a parabola, we won't get the 80% drawdown. But if we continue going up, we may still see the 40 to 60% drawdowns because parabolas tend to bring in a lot of hot money and the speculators. Yeah. And I think last cycle was basically a lot of that. We had a lot of hot money. Yeah. And now I think there's a sustained bid by companies or entities that wish to hold, which brings us to, I guess, something that's been a point of discussion, Bitcoin Treasury companies. I don't have a lot of doubt around MicroStrategy because I think they are exceptionally well run with respect to their risk. I have a problem with the long tail, and I don't know if the long tail is after company 3 or 4 or even after company 1. But that long tail of Bitcoin Treasury companies that are popping up everywhere, I'm not sure how well run they are. So I'm interested in getting your point of view on the risks of these Bitcoin Treasury companies to the Bitcoin price.
Yeah. It's a very interesting part of the market right now. And it's exact, you asked, I'm going to answer that question, but you asked where we are in the cycle. And I said, in the first phase is retail. The second phase is institutional and sovereign. So this is a natural part of this move. It's time for the institutions to come in. That's exactly what's happening. I have a front row seat to this because with my fund, Bitcoin Opportunity Fund, we invest into all these deals before they go public. I have a front row seat to a company called Matador, and part of that company, we're doing a treasury strategy. What I would say about it is first of all, will there be too many companies and a washout? Yes, of course. Number one, we know human emotion is there, and what humans will do is they'll push things too far. They'll take on too much risk. They'll take on too much debt. Number one, that's humans. Number two, the very nature of the business is to lever up as much as you can. So the nature of the business is leverage, plus humans will take it too far. So of course there will be some that will take it too far, and there will be a big washout. I would say that I don't think we're anywhere near that stage right now for a couple of reasons. Number one, a lot of people doubt how many of these companies the market can bear. A lot of people think that MicroStrategy is going to win the whole thing. There's not going to be room for other people. And I think that's a completely wrong take. If you look at like, what's happening is people are still, Jeff Booth talks about this all the time, we're trying to understand a new paradigm from the one that we're in today, and it doesn't make sense to us. And so what's happening is you're looking at these new treasury companies with a traditional financial lens, and it doesn't make any sense, and we can't make sense of it. Even in my fund, some of my partners, they're still like, but what's the underlying business model? I'm like, get out of here. You're not Benjamin Graham, dude. That was like 100 years ago, right? Like, so there's a whole new set of metrics today. I'm going to talk about this at my keynote here. So for example, instead of like PE ratios or return on employees or, cash flows, discounted cash flows, instead it's now BPS, like Bitcoin per share. And now it's like MNAV, and it's like days to cover. And so it's like a whole new set of metrics. And what I would say is like MicroStrategy was a software company, and they still sell software today. But really what their product in the market today is MSTR, their ticker. And each one of those tickers is basically a different financial product. And then we have Metaplanet, and then we have the blockchain group in France, right? And each one of those is a little bit different. So the blockchain group, for example, their stock's up 2,000% in 6 months, and they're doing a Bitcoin bond. No one else is doing a Bitcoin bond. So that's a different financial product. So then the question I would ask is, well, how many financial products can the market bear? Tens of thousands. Right? An ETF, anybody could make an ETF. It's a basket, and then you make up the basket of whatever you want. So you can almost look at each one of these as like an ETF. How many ETFs can the market bear? Tens of thousands. So I don't think we'll get to a point where the market gets too saturated. Each one of these companies will do something different. Now, that's a lot different than if some will get into danger, because the very nature is to leverage up the Bitcoin that you have. So you're tapping into public equity markets and public debt markets to lever up the Bitcoin that you have. So I think there's a couple ways that you can look at this. So number one, I had dinner with some people last night, and they were thinking that, yeah, but how much appetite is there for these companies? But they're thinking about it from how much Bitcoin money there is. But these are tapping into the $300 trillion bond market. These are jumping into the $200 trillion equity market. That's where the money's coming from. And so there's an almost endless amount of money coming from that right now. But what we're looking at is, the way that I'm sort of seeing this is, you have these companies using the public debt and equity markets to get the Bitcoin. So they're selling their stock at the market ATM to buy more Bitcoin, or they're borrowing debt, convertible debt, to buy the Bitcoin. But let's just say that, people are buying that right now. Metaplanet's like a 6.8 times MNAV. So it's a multiple, like a PE ratio, right? So maybe they buy at the equity at a 6.8 and it drops to a 3. Well, in US dollar terms, they lost money. But Metaplanet's Bitcoin per share could go up. So to these Bitcoin companies, they're thinking one Bitcoin is one Bitcoin. So when you're like, but what happens in the next bear market? What bear market? If one Bitcoin is one Bitcoin, there's no bear market. You're still thinking in US dollar terms.
My objection to that would be, let me play the devil's advocate, their loans are denominated in fiat, right? And so MicroStrategy has their debt at 6 and 7 years, and that seems like a prudent strategy. I haven't looked at the long tail of these companies and what their debt maturity is at. But the real risk is if they get caught in a prolonged bear market, or the time comes to refinance some of these. And many of these companies won't be able, if they're in a situation where they won't be able to refinance under similar conditions, similar terms, that allows them to hold on to their Bitcoin. Or if MNAV turns negative, like, a lot of people did not anticipate that happening to GBTC in the last bear market. And when it happened, that was a locked fund. They weren't able to liquidate that. But in this instance, they will have to liquidate Bitcoin if they're not managing their maturity dates prudently. So I just wonder, I agree with you there. Their objective is to hold on to the Bitcoin in perpetuity, but will they be able to? Yeah. Will they be able to manage their fiat-denominated risk through bear markets? Now, the assumption has been, well, bear markets only last for 12 months. And, even if we continue buying at the top, it's only a 4-year period that we need to hold on before our purchase at a prior top go into profit. But let's have a look at gold. What happened when gold launched, when the gold ETF was launched? We had this prolonged multi-year bull run, and then a multi-year, was it like 6, 7, 8, 9 years of a bear market and then just consolidation before it broke that. Now, if that happens in Bitcoin, let's say we run 4, 5, 6, 7, 8, 9 years, a lot of these companies that are borrowing on terms of 5, 6, 7 years, well, not many of them are borrowing at 7 years, they're going to get caught short after the 4th and 5th years. Now, you might say that risk is minuscule, but that risk is, it's still a risk, isn't it? And it's coming back to the painful lessons that I've learned, is that you've got to manage risk for what's possible, not just what you think is likely to happen.
So you're absolutely right with that risk. So if you had term debt, when that debt is coming to term, then the speculators could attack that and push the MNAV down and try to take the Bitcoin for less than the book value of it. You're absolutely right. But we're not seeing that. So right now, the companies that are in the space right now are taking convertible debt. So it's like non-recourse debt. So the money is not due back by a certain date. It converts over. So for example, it can convert over into equity of the company. So, okay, we're not, okay, now we'll just take equity, right? So it's not that what you've described could be dangerous. And I would imagine some companies will do that. And those companies could get into danger if those conditions happen. But that's not the situation that we have today. Nobody's in that situation right now. All the debt that's happening is either non-recourse debt or convertible debt. And so there is no function where they'll be forced to sell it like that.
Typically, the conversion is at the holder's discretion if the price is above the strike price, right? If it's under that, they get the recall, they get the demand payment.
So like with the blockchain group, for example, right, they're doing a Bitcoin bond. So you put up the Bitcoin sits in a bond, and then at the date, at the strike, you either get the Bitcoin back or you convert it into the equity, like whichever is higher, right? So yeah, you would get the Bitcoin back. Most of like MicroStrategy's debt is not that. You can look at Metaplanet's debt, and I think their debt to cover ratio is like 10%. So again, to the risks that you've identified, those are real risks. And I do believe some companies will put themselves into that risk. I just don't see that right now.
The other thing is a negative MNAV, right? So I think Checkmate, he put out the scenario where he said, well, if they go negative and these companies are intent on increasing Bitcoin per share, the rational thing to do would be to sell their Bitcoin and buy the stock. And I'm like, well, MicroStrategy has the discipline not to do that. And they're focused enough to say, no, we'll just ride out a period where finance may not be as readily available, and we'll buy through cash flows or whatever means we can. And then when conditions improve, we'll buy that. But it doesn't make sense that all of these other companies will do that either.
Yeah.
So I'm wondering, because it's a rational
Bailey
thing to
already
do.
said he would, right? So David Bailey was on Twitter saying he would sell the Bitcoin to buy the stock back. But again, that's because the goal is to grow the Bitcoin per share, right? And so I think where it's hard for, we talked a whole lot about looking at risk, and it's hard for us to understand all the risks because we don't know until we kind of get there, unfortunately. But there are some risks. So let's say, for example, Michael Saylor, everybody was calling for his liquidation in the last bear market.
No, but that was out of ignorance. Because he has no liquidation price.
I know, but I want to bring up the point is that, but because what he did when he first decided to put Bitcoin or MicroStrategy into this Bitcoin market, he first offered all the shareholders to buy back their stock. He offered all the board members to exit the company, right? And the reason why I just want to bring that point up is it's very important to make sure the leadership of the company and the shareholders are aligned, and that they understand that the goal is to grow the Bitcoin. Because what happens is if you don't have that, then you get into a lot of this thing where like, hey, we need to sell, we need to liquidate, things like that. So back to David Bailey saying he would sell some Bitcoin to get the BPS up. If the leadership and the stockholders are not aligned in that mission, then it can unravel pretty quickly.
Well, let me outline the situation in which he said he would sell and paint the scenario of what the market conditions are going to be like in that moment. Because we've already gone through that with with Saylor, right? Saylor was steadfast in saying we're not selling. Documented disclosures about the terms of his loans that were not recallable. And yet there was a seemingly concerted campaign to put out FUD about an impending margin call on MicroStrategy's loans, which were refuted. I mean, I posted the evidence against that, so did Michael Saylor. It was refuted in interviews, and it persisted through the depths of the bear market. When there's fear, no one is really wanting to listen to rational explanations when the market is dumping, right? So we're going to be in that situation. The market is dumping. We're in the bear market because that's only such a bear market will bring about negative MNAV, right? So in that situation, then we're going to have a bunch of Bitcoin Treasury companies selling Bitcoin to buy back their stock. So that's going to feed into the doom loop of all these morons calling for liquidation of Bitcoin Treasury companies. And it's actually going to happen. They're going to liquidate themselves to buy their stock. And as a result, short sellers are going to pile into the whole sector. Yep. And that's going to feed into a doom loop of liquidations. So that's how I see the scenario planning out. Knowing what happened in the previous cycle of financial markets commentators, media, from Bloomberg all the way across Wall Street Journal, everybody feeding into a doom loop despite rational, documented, fully disclosed SEC documentation from the company, in that case, MicroStrategy, refuting the FUD, which still persisted and did not stop again until the Bitcoin price bottomed out after 11 or 12 months into the bear market and started bouncing back. So my thing is, actually, regardless of what they say and claim that it's some kind of virtue to increase Bitcoin per share, I think what's going to happen is it's going to feed into a doom loop in the depths of the bear market. Yeah. And we don't know what the outcome of that is. Once there's a runaway loop of the like that I've just described, we don't really know what the outcome of that's going to be.
Yeah, I mean, you're right. We don't know the outcome of that. What I would say is, as of right now, we're looking at 15 companies. And in that example, I don't think most of them will go into that. David Bailey said he would. We'll see as we get a little bit further. But ultimately, I mean, they raised money to buy the Bitcoin, so they're not even levered up at this point, right? So sort of like we saw the Smarter Web company, a UK-based company, right? So they just went and they pushed their stock price up. They sold the stock at the market. They bought more Bitcoin, and so they've got way more Bitcoin than they started with. So only Bailey has said that. So we're talking about 12, 15 companies. Will they all start selling the Bitcoin to buy their stock back? We don't know that. There's a lot of questions that we don't know answers to. But certainly we know the short sellers will come out and do that. We do know that this type of a situation will arise. So I would agree with you on that. What we don't know is how big and how severe it will be. I think that the downside will be muted because it's going to be most of a loss in equity and not Bitcoin. So as opposed to what we saw like with Terra Luna, for example, right? They were forced to liquidate the Bitcoin at a discount to defend the peg. But these companies aren't really being forced to defend a peg. I think maybe a couple of them will probably fall into that doom loop. I don't think it'll take down the whole market. And I think overall, it'll be less drawdown. It'll be an equity drawdown, not a Bitcoin drawdown like we saw in the past cycle. But the risk is there. I don't have any way to refute that there is not that risk that will be there. We just don't know. As of right now, the number of companies we see in the market, it's not a systemic risk. A year from now, is there going to be 1,000 that will be? Maybe, but we're not there yet.
I just think these are financial engineering companies, right? And so they're not going to be able to resist the temptation of a negative MNAV because they're just going to think they're taking advantage of an opportunity. For them, it's an opportunity, not understanding that them following their stated rational ambition of increasing Bitcoin per share is actually going to exacerbate a cycle and feed into a doom loop that could unravel that whole play. I don't know if it will, but it could. Yeah. And so just by them following their rational self-interest, their stated, and that's one of the reasons, I just want to say this as well, it's one of the reasons why Michael Saylor and MicroStrategy have never sold Bitcoin. They can look back now at a whole cycle, including a bear market, and say, we didn't sell then, we're not going to sell now. Yeah. Number one, I don't think these other companies will resist the temptation of a negative MNAV, and some of them have already said we will sell. Yeah. And I don't know whether or not they have the discipline to see it through yet. So I don't see it as a risk to Bitcoin. Yeah. We're only talking in terms of price movement, and I'm fascinated to see who will come through.
Yeah, again, we're talking hypotheticals, and to all those things, you're right. But what I would say is, number one, even if a company is dedicated to the BPS, over what time frame? Are they thinking in 3-year timeframes, 5-year time? So like right now, a lot of people have been attacking MicroStrategy because he's been tapping the ATM too much, which has been depressing the stock price. And Michael Saylor's an idiot. What is he doing? Look at Metaplanet. It's going up so much. He's screwing all the stockholders. Like, really? Holds most of the MicroStrategy stock. He's the largest shareholder. He's going to be the most wealthy person in the world probably in the next 5 to 10 years. Of course, he wants the price of the stock to go up, but he's playing a different game over a different time frame. So he's like, hey, we're just buying. I mean, he just bought more Bitcoin in one day than Metaplanet's acquired, in a year and a half or whatever. But when Bitcoin 10x's, MicroStrategy will be up here. So he's playing a game over a different time frame. And the reason why I just bring that up is because back to the BPS, over what time frame? Are they okay to not increase the BPS for the next 12 months, but over a 3-year time frame, the goal is to get the BPS up, for example? And what do I mean by that? So for example, like what Saylor did is Saylor's doing like big purchases at once. But what other companies like Metaplanet is they're dripping their purchases over time. So they're keeping their MNAV and their days to cover more consistent. And by being more consistent, it allows the stock to move up at a better angle. Whereas MicroStrategy, a lot of people debate, like, would they have been better to not do the big lumps and drip it in over time? But again, he's playing a game over a different time frame. And so back to the BPS, if the goal is to get the BPS up, which yes, it makes sense, but are they okay with letting the BPS drop for the next 12 months? For the next 18 months?
Yeah.
And it would make sense that if you're a Bitcoin company, you believe one Bitcoin's worth one Bitcoin, it would make sense to maybe let that ride out over the bear market, which is why it's important to really have the leadership all the way down to the equity holders in line. I don't know. Like I said, the risks that you've outlined are there. How that plays out, we just don't know because it's not there yet. And when I say it's not there yet, we don't have those companies that are in that situation right now. I think that, if we have another drawdown in the middle of next year, which, based off of this global liquidity cycles looks, probably realistic, there will probably be 500 companies in the market at that point. And yeah, some of them are going to go down. I think the global macro picture is important to understand though, in regards to this, because we've been talking about like the 4-year Bitcoin cycle, but that's like the tail, wagging or the dog's wagging the tail, so to speak. Right. So it's like, you can't really look at this in isolation. I think the macro cycle is what's the dog here, right? And so what happened is you have all this debt. We both talked about like 2008, the great financial crash. And you said something that in Australian real estate, you were expecting for it to crash, but it never did. It's continued going up for 30 years. And if we go back to that and we understand why, so you understood that the banks aren't fractionally lending, they're just printing money. And so really what happened is 2008 changed everything. It's sort of like BC and AD, in my opinion. And so a lot of times people are going back to, the 1970s and the 1930s and then 1808. It's like everything changed. And what changed is, back to the point of the housing, what we saw in previous drawdowns, the Great Depression in the 30s or the 70s or the year 2000, the dot-com crash, the central banks allowed the deleveraging to happen. Well, let's just ride this thing out. And sure, they tried to manipulate a little bit, but they basically tried to let it happen. In 2008, they also tried to allow it to deleverage, but it started to be systemic. It was the great financial crash, the banking crisis was happening. And so if you look at this in terms of time, for example, you can see that in the United States, like housing construction, housing markets sort of drive most of the economy. And housing starts were down 28%. A massive crash, but yet the government did nothing for almost 3.5 years. When Bear Stearns collapsed, which was basically known as the trigger that caused the entire banking collapse to happen, it took 7 months before any bailout even happened. So they were trying to allow it to kind of happen, but it kept getting worse and worse. There was like no bottom, right? And I remember when they announced that the TARP bailout was like $700 billion. I was like, no, like you can't do this. As today, that's not even a drop in the bucket.
800 billion used to be a lot of money.
Yeah, it used to be a lot of money. But what happened is 2 things happened. So number one, it showed that the system was too levered up at that point to allow it to deleverage. And then what happened is then they over leverage it more. If you look at the Fed balance sheet in 2008, it's like a straight up wall, right? We had about $4 or $5 trillion at that point. And so then now the system got, two things happened. One, it got so levered up now that there's no way it can deleverage. But also number two is it changed just the psychology and the appetite of the governments to allow it to deleverage. So we can look forward. If we look at 2020, they shut the whole world down and we had the markets crash, but this time it took 3 months before they blew the thing back up sky high, compared to in 2008, from the market peak to back the dip and back to market peak was 7 years. In 2000, it was 15 years. 2008 was 7 years. In 2020, it was 3 months. In 2023, we had 3 banks in the US collapse. It took 6 days for a bailout. The US is running $2 trillion deficits, $1 trillion every 90 days right now, on a $7 trillion budget. 3% debt to GDP right now. And so we're at this point, like Lynn Alden talks about, nothing stops this train. We're at a point of fiscal dominance. It's the government printing is now bigger than the economy, right? And so the only way we have a recession at this point is by policy choice. The governments are driving the economy and they choose if we want a recession, but of course no politician is going to choose that, right? There's no appetite for that. They've proven that. And so I think a couple things are important to understand. Number one, back to 2008 being that starting point. What happened is pre-2008, you had all this debt from 30-year bonds to short-term debt, right? And it's all over different terms at different rates. But in 2008, it's sort of like a metronome that keeps perfect time of music. If I have metronomes that keep perfect time, if I put 100 of them on a table and start them all at different times, there's this phenomenon where they'll all get synced up together. So you have all this debt, but all the banks around the world called everyone on the same day and said, hey, we'll refinance you to zero. Do you want to do that? And everybody refinanced their debt and it synced up all that debt. And right now we can see about 75% of the debt is about a 3 to 5 year maturity. About 4 years. And that started on 2008. It's 2008, 2012, 2016, 2020, 2024. That just happens to be synced up with the 4-year Bitcoin halving cycle. It happens to be synced up with the US presidential cycle. It happens to be synced up with the 4-year ISM business cycle, are all in that time frame. So really what we have is this debt having to be reset every 4 years. And on year 3, when the debt's being refinanced, there's not enough liquidity. So the market starts drawing down. The next liquidity tranche gets pumped in and the markets take off again. Michael Howell, he's sort of what I would consider the GOAT in the global liquidity cycle. He says it's more of like a 5-year cycle, but somewhere in that time frame. So the question is, number one, back to the housing in Australia, it never went down, again, because when you increase the money supply, the asset prices go up. And I think a lot of people are still in this Benjamin Graham world trying to understand prices and trying to think if they're going to revert back to the mean. Will the houses get back down to that point again? But they're looking at prices based off of historical prices and not understanding liquidity in the system. As long as that liquidity stays in the system, the prices can't drop back down. I mean, sure, they'll fluctuate a little bit, right? And so what happened in 2008 is the liquidity sucked out, the prices came down, but then the liquidity went back up, right? And so we have to understand it from that mechanism. And so we have to, stop thinking about prices from historical means and start thinking about it in terms of liquidity in the system. So then the question to be asked is, well, how much liquidity will be in the system? And so the United States, the CBO, Congressional Budget Office, they tell us for the next 30 years through 2054, they tell us what the deficits will be, what the debt will be, and they tell us what that will be, right? And we can see it's going parabolic. And we can see other nations around the world, China right now, massive easing going on, the ECB, massive easing going on, and so liquidity is going up. And so it's really hard to tell the future. But I would say, number one, the 4-year sort of liquidity cycle isn't intact until proven otherwise. But we will only know once we get to Q4 and see what the banks are still doing. Number two, I would say that it looks like, to me, though, the appetite for that recession is gone. Does it mean that we'll never see prices go down again? Of course not, right? But I think we're potentially going to be past that big 4-year cycle. But we'll know a quarter at a time.
I think one of the things, in addition to Wall Street demanding bailouts every time the markets are jittery, is we have a generation of boomers who essentially, they understood that Social Security was not going to be there for them, and the government policy effectively corralled them into investing into either stock market or real estate. And so this whole generation, which is still in power, they can't see through an 18 months, 24-month recession. So it's been incumbent on the government to not leave them destitute, their peers essentially, creating policy for their own benefit. And so people like me and younger people who have not been able to get the benefit of these cycles that have been, throughout history of recession booms and busts clearing out excess. And instead, we've had the liquidity pumps assuring boomers of high asset prices being maintained to fund their retirements. So I'm just wondering, how long before?
I think that's only one part of it, though.
Yeah.
So that's only one part of it. So first of all, I would say people look back at look how cheap homes were 20 years ago. In 20 years from now, we're going to say the same thing. So you think it's like these liquidity pumps, it's not going to continue? The rate of money growth won't be accelerating from here? If you look back over the last 20 years, you can draw a trend line on the money growth here, and then the trend line went like this, and the trend line went like this, and the trend line. So we're accelerating. So if you go from 2018 to today, the U.S. money supply has grown by 8%, but from 2019 it's grown by 10%, right? So the rate of growth is accelerating. So it's not like, oh, they benefited from this. We're all benefiting from it. You're just looking at hindsight, not thinking about the future, number one. But I would say it's bigger than just the retirement savings. It is important, yes. And so I would guess if you asked most people, even young people, would you rather your entire net worth get cut in half? You lose your job, you lose your business, your job pays you half as much, but gas is a little bit cheaper? Or would you rather your assets go up in value, your business takes off, and you keep your job and maybe get a raise, but gas goes up by 50%? I think everybody would rather see the growth, even if prices got a little bit higher. So I think politically, it's a more stable, and I think that's the point you're making. But it's bigger than that, right? So again, because we're in a debt-based monetary system, two things. Number one, the money supply grows through debt issuance. When the money supply grows through debt issuance, the dollars are the liability, but the debt is the asset. And the debt becomes collateral for more debt. So it's not like, oh yeah, let the baby boomers screw the retirement, whatever, let's save the, no, it's not about that, because all that debt is collateral for more debt. So the entire system implodes, the entire banking system implodes, number one. But number two, the governments, even though they print money, they still need tax revenue, right? The U.S. is running a $2 trillion deficit. They can't just print, they could. If they printed $7 trillion a year, right, what would happen, right? So in a normal recession, in a normal recession, not even a deep recession, the U.S. tax receipts will drop 12 to 15%. So because the government, a big chunk of the revenue comes from cap gains. It comes from the stock market. If you overlay the stock market with revenues, they're exactly correlated. So if asset prices come down, home prices, stock prices, et cetera, the government revenues will plunge, and they can't afford that. So the government can't afford a recession. So it's not even about saving baby boomers. Yes, that's important politically, but it's more important because what happens with the government if their revenues drop by 30, 40%?
Well, but historically we've had recessions and governments have had to make do with that, right? Whereas it feels like the last 15 years, we've just said no more recessions.
Yeah, but governments used to run on surpluses. When Bill Clinton was a president, the U.S. had a surplus. Today, we have a $2 trillion deficit. That's a big difference, right? When you're putting 10% of your earned income in savings every month, you can weather a 30-day, 60-day financial storm. When you're running off all your credit cards and you're maxed out, you don't have the buffer room. So it's just a lot different today. We used to have those recessions when the system wasn't as levered up, so it wouldn't collapse as fast, number one. Number two, the government had a surplus, not a recession. Number three, we were at 40, 50% debt to GDP ratios. Today we're at 123.
I'm familiar with all those numbers, and I'm just like, okay, but there was a point we went from surplus to deficit. Yeah. Is that just a coincidence that the timing of that is when the boomers started retiring?
Well, certainly demographics play a big piece of that.
Because they're still the largest demographic in the United States, at least. I'm pretty sure that's also the case in the United Kingdom.
In the developed world, it is. The U.S. had like a echo boom, so the millennials are about the same size as the baby boomers, but yeah, the developed world is about the same. But yes, we have a massive depopulation happening. I don't want to say depopulation is some agenda to kill people off, but just demographics are trending down. And so we have less people in the workforce. So like, for example, in the United States, that's down to about 60%. And so when you have less people participating, that's less growth. less businesses, less growth happening. And so then we have to make up for that growth with deficit spending. It's a big piece of it.
I'm fascinated with your background in technology. I can't help but want to bring up AI, artificial intelligence, because in one sense, as an entrepreneur, I'm absolutely energized and excited about the possibilities that it empowers me to bring about. But on the other hand, societally, I see a lot of carnage about to come our way, and I don't really see an answer. How do you see this whole situation playing out?
So back to studying cycles, I was talking about every 50 years we have these technological revolution cycles. And so every single one of these has been the same thing. And so let's go back to, if we go back to pre-industrial revolution, basically we were farming and textiles. There was a group of people called the Luddites. And the Luddites were a group of people that were afraid of the power loom, because the power loom made it much faster and easier to do textiles and was going to put a bunch of people out of work, and they went and burned them all down. So every time there's a new technology is a tool. And the tools help us do our jobs faster, easier, more efficient. And when we do things more efficiently, we need less people. And so every technology cycle has done this. In the first industrial revolution, we had mechanized machines. Mechanized machines for the first time that could do the work of 5,000 men. But what do the 5,000 men go do? Well, you're supposed to go do higher value things. So then we learned science and we learned medicine and technology, right? And then electricity put the candle makers out of business, and the cars put the buggy makers out of business, and the horse trainers out of business. And computers were supposed to take away all these jobs, and they did, but then they created all these new jobs. So each time we have this, we see the same thing. So number one, I don't see this massive doom and gloom like, oh my God, there's never gonna be jobs again. What are we gonna do? I believe it will create more jobs than it displaces. It's what's called creative destruction. So we destroy the old way, but we create a new way. But each one of those does have periods of disruption. So all of a sudden there's 5,000 men out of work. What do they do? And so I do see, to the point that everyone's afraid of, that yes, a lot of people are gonna their jobs will be threatened for sure. I think over time it creates more jobs than we lose. But what happens in the meantime? So I would say, number one, we can probably look back to maybe like 1989, 1990-ish for a good sort of glimpse into this. So we both had the internet at that time, and China was brought onto the World Trade Organization. And so a lot of the US jobs went to China, and the internet came out at the same time. And we had a massive disruption there, and the government had to pump in money to replace that. So I would say that, there's gonna be a lot of disruption. So you combine that with aging demographics, which we just talked about. I mean, that means even more government debt that they're gonna have to pump into the system. And back to recessions being a policy choice, it looks like that's not gonna be an option. But yeah, I think history shows us that more jobs should be created than are lost.
So I guess in general, I'm in total agreement with how historical technological revolutions have played out. Inevitably, humans have gone up the value chain of doing higher value added jobs. But in this instance, we've got artificial intelligence that can do higher value mental tasks. And then we've got robotics that can do all the manufacturing, anything that's manual. Essentially, they will get to the ability to be able to do that. And then combined, they can even do highly creative and intellectual tasks that require any level of sort of physical exertion as well. So where do the humans go up on that scale? Because anything that you can conceive of can be done by either robotics, AI, or some combination of the two.
Yeah. Well, let's talk about robotics, right? So for example, you're saying that they could do things in a warehouse or assembly line that a human could do. You used to take 5,000 people in a field to go pick the cottons or the beans, and now a tractor could just go through and just do that. So didn't it do this? Wasn't that the same thing?
Yep, I'm saying that's exactly what's going to happen.
And so like we continue to see this happen over and over, but who's going to design the system for the robots, and who's going to make the parts, and who, right? So it's like,
I would posit that the AI is going to do that.
Yeah. I look at AI as a tool, and humans use tools to become more efficient so we can work on higher value things. So there's two things that are like my beliefs that maybe are more beliefs than like, how do we pinpoint this? But like, number one, I talked about at the beginning that most people have a hard time getting Bitcoin because they don't understand money, but they also don't understand value creation. So value creation, we get paid for the value that we provide. When we provide value, we're solving a problem. creatively, entrepreneurs see problems and come up with creative solutions for those problems. I don't believe there's a future where humans no longer have problems. Biggie said it, Notorious B.I.G., more money, more problems. So I don't believe there's a future where there's no problems. So as long as humans have problems, humans need to come up with solutions for those problems.
Well, I don't hold any fear for entrepreneurs having a lack of problems to solve. I just think more and more of those problems will be solved with a combination of robotics and AI, not with humans.
And I agree, just like more of those problems of picking cotton were solved by machines as well. And just like more problems of putting data onto spreadsheets were solved by computers. And just like problems of communication was solved by FaceTime or, Zoom. But so every time those tools, the AI, the robotics, the computers did take humans' jobs every single time.
Yeah, but okay, so that's the point I'm making. Every single time that's happened, humans have moved up the curve of higher value jobs, right? AI and robotics take away that curve entirely.
Yeah. And so that was my second belief that I can get to, that I believe that they're tools and they can't replace human creativity. So they can help us do things much faster, easier, more efficient, but they don't replace humans. I don't believe in that world.
Have you spoken to the average person? Right?
Trust me, I get 5,000 comments a week. Most
Yeah,
people are never going to make it.
It's a rhetorical thing, right?
No, I know.
Most people want a job. And if we don't have jobs for them, there's going to be catastrophic societal upheaval. That is what I fear for. Is not that there isn't enough money in the system to take care of everybody in some kind of socialist redistributive manner. I think if there was a will to take care of people, we can take care of people. We live in a world of abundance. I don't know what kind of political or economic system is going to facilitate that. And I'm not making a projection on that, right? But there is abundance in the world to look after everybody. But people need purpose. People need jobs. People need the ability to direct themselves in some kind of pursuit, whether it's, they need to feel useful, right? And they need to feel like they are directing their lives in some way. And so I don't know what that's going to look like. I don't see a manifestation of any kind of job a human will do that a machine with AI can't do better and cheaper and faster and perpetually in motion. So I'm like, I don't see what work is it going to do. I can see plenty of opportunity as an entrepreneur, but we can't have 8 billion entrepreneurs in the world. I think we can agree on that, right?
I mean, these are complex issues. Let's break some of these things down one by one. So first of all, we're talking about a highly uneducated class that just wants to be given a job of moving widgets from...
Even an educated class. Most of the people I've worked with in large companies, very educated, highly qualified people are automatons, essentially. They've acquired knowledge and they put it to use. AI does that 90-95% as well as they do in most cases, except for the edge cases.
So I think we agree that there's massive disruption coming.
Yeah.
And we don't know how this is going to play out. I think over the next 5 years, it's going to hit us really hard. The rate of AI agents coming on, the agentic platforms that we have right now are accelerating so fast. I was talking to one of my friends who's building a tech company yesterday here, and I was asking him, how do you even build a tech company when it's moving so fast? These AI agents just are advancing every week, right? And these AI agents already now could go out, do research, find the top 10 online businesses in whatever niche I want, and go hire other agents, just duplicate them en masse. And they could get the website, get up the domain, they could start doing the Facebook ad, the whole thing. And like within a couple of years, pretty much every online information-based business is going to be disrupted. And we live in a world where scarcity creates value. So like an attorney, for example, a scarcity of information. But if that information was readily available, what happens to attorneys and doctors, all these things? So I think there's going to be massive disruption, and we're not really prepared for that. Longer term, though, I believe in abundance and not scarcity. I believe that wealth creates more wealth. And so what happens is, let's say Amazon, for example, Jeff Bezos created a platform, Amazon, that have now given millions of people the opportunity to become millionaires by selling on that. And all these millions more vendors to sell to those millions of millionaires to sell online, right? So we created way more jobs than we ever knew were even going to be realistic or possible, because wealth creates more wealth. Now, certainly I see this dangerous gap, but I think on the other side of it, I think about like businesses. So people are like, well, all these people are going to get laid off because AI can do their job. I don't see that's how the world works. In a world of abundance, my job as a business owner is to grow my business. So what I'm doing in my businesses right now is I'm telling all my people, I'm not firing anybody. I'm telling them they better learn how to do AI now, or their job will be replaced by it. And my job is to grow my business by being more efficient, not get rid of everybody, right? So like the scarcity mindset would go, well, why don't I just fire 75% of my staff and keep my business the same size? An abundance mindset says, why don't I grow my business 10 times with adding only 10% more people?
As an entrepreneur, I have that disposition as well. When I look as an analyst to industry, most industries are mature. And so AI and robotics are going to present an opportunity to become more efficient, right? So that's going to, in my estimation, it's going to lead to a collapse in demand for labor.
Right, but you're assuming that we have no new industries. Look how different the business climate is today than it was even just 5 years ago or 10 years ago.
No. I'm not assuming there aren't going to be any new industries. I'm assuming whatever new industries pop up, the demand for humans to perform the roles in those new industries and companies is going to be minimal.
I think that viewpoint then sort of imagines, let's just say the business universe is a pie. And so what you're saying is that currently the pie, the business universe, is employing, 5 billion people out of the 8 billion people in the world. But in the AI world, that pie only needs to employ 3 billion people, not the 5. I'm saying, why don't we still employ the 5, but grow the pie 50% bigger?
Because the commercial imperative is for you not to retain a cost base that is no longer profitable for you. Most companies will, and we're seeing it already now. We're seeing even consulting firms, legal firms cut staff because they've realized, actually, if we just upload our knowledge base and train an agent, it can do, we don't need 10 interns, we can have 2. We don't need 40 junior partners.
That's the short-term disruption. That's the short-term disruption. So the 5,000 men got laid off from picking cotton in the field, and there was a short-term disruption. Those 5,000 men are now out of work. So that's the short-term dip. Over long-term, those men went and started all new industries that we had never thought of before. And so what I'm saying is right now, the short-term disruption is certainly all these law firm people, content creators, coders, they get laid off. But all those coders that got laid off will go start new industries that we haven't thought of yet. So in the short term, we have that big disruption, but over the long term, the pie gets bigger. That's just what history shows. And what happens is, humans are no good at imagining the future because all we can imagine is a better version of what we have today, but we don't realize that we'll have new sets of building blocks to build things that we haven't imagined. So for example, right, in the late 1800s, we got steel and electricity. Well, steel and electricity gave us new sets of building blocks to build things that we hadn't thought of, like skyscrapers and bridges and spaceships, right? And so, all of these new things that are being created, the combination of AI and Bitcoin and AI agents will allow us to build things that you and I can't think of yet. But all these people that go out of work will go start these new industries and these new businesses. And so, again, we're trying to project the future, and one of the best ways we can do that is look at the past. And I just think, to your point, I agree. Yes, massive disruption, a lot of job layoffs, a lot of people being displaced, a lot of people losing their jobs. We see it right now. There's no disputing the fact, right? Thousands of people are being laid off. But I think those people go start new businesses and new industries, and the pie gets bigger. That's what's always happened. That's what's always happened.
Part of me believes that, and the other part of me sees what the immediate effects of automation are going to be. And I'm like, okay, assuming that and believing in that, what's the pathway for that? And I don't see that path linking the two, the catastrophic situation from the freeing up of human capital. I don't see that pathway yet.
Well, everyone has done it, right? Like I said, the 5,000 men, what did they do? There was the massive dip.
Oh, so my problem is not foreseeing which industries will come about. I'm saying whichever industries are created, whichever opportunities, they will not need humans to do the job.
I understand what you're saying.
Yeah.
It's just like humans were no longer needed to pick cotton in the field anymore. Humans are no longer needed.
No.
But what you're, I understand what you're saying.
But after that, after what? So let me take that example. Once they weren't needed to pick cotton, there was a new industry created that needed humans. I'm saying the new industries that will be created won't need humans.
Yeah, and that's where I think we just disagree, right? So if we play that out, right? So then the people didn't pick cotton anymore. Now they went and designed the machines and made the machines to pick the cotton. And what you're saying is, well, the AI will just do everything on its own and it'll just design the machines and it'll just make the machines. And then, okay, then that's going to replace those machines. So then those machines will go create new machines. And like, I don't believe in that.
It will be minimal human capital intervention required.
Right.
Yeah. So like when I graduated, I went to work at a big bank. We had 250 graduates in that intake. There's no need for that anymore. There's no need for them to take 250 graduates to do fairly low-level work on PowerPoint and Excel, right? You could probably deal with another 10 or 15 of them to come in and do the work of 4, 5, 6, 7 graduates using AI to do most of the kind of work that you'd be given as a graduate.
Yeah. We the thing is number one, humans are, I mentioned this earlier, we're dumb animals, we're motivated by pain and pleasure, fear and greed, right? And so the reason why humans are way more attuned to fear, because we had to stay alive. We need to see the grass and the snake, so to speak, right? So this is why doom sells. As a YouTuber, it's terrible because like every headline has to scream that the world is ending or nobody clicks on the stupid video. You understand what I'm talking about, right?
I do.
So like we complain how the media manipulates us by showing us doom, but when I put something hopeful on a title, nobody freaking clicks on it, man.
Yeah.
Anytime I talk about how we can make money or get rich or change our future, nobody wants that. They want to know the danger. And so this conversation really speaks to people because it's much easier to believe the bad is going to happen when everything in history shows the opposite. And so our human nature, because we're more in tune to fear, gravitates to this, oh my gosh, it's going to end. Just like the Luddites burned the friggin' looms, man, right? But history shows us different, and that's because of human ingenuity. And that's because I believe, well, factually, history just shows us a different picture. Factually, it shows us the pie gets bigger. Factually, it shows us that humans move on to bigger things. Factually, we understand that tools allow less human intervention, which then allows humans to go work on higher value things. Now, for some reason, that just ends. I don't believe so. Part of the reason why I don't believe so, I guess, probably is I would say I have a belief in God, and I believe that we're made as creators, is in God's image, and I don't believe that machines will ever replace that. So I think that, number one, like I said, facts show us that, and we're more in tune to that. But what I would say is that when I was in school, my mom wanted me to go to school and be an engineer. That was a really good job. When I was a kid growing up, it was like, what do you want to be when you grow up? A fireman, a police officer, right? A doctor? You had like 5 career choices, right? Those bankers that you talked about that are out of work today, now they're doing prompt engineering. That wasn't a job when they first became a banker. Like, how many thousands and thousands of jobs are people doing today that were not around 5 years ago or 10 years ago? So it's just like, we can believe and we can be tuned into the fear, but the thing that separates the people that are successful in life and the non-successful people in life isn't skill, it's not knowledge, it's not connections, it's the ability to take risk. And if you're not optimistic about the future, you'll never take that risk, right? And so all of the evidence we have over the last 20 years of technology proves the opposite of that, fear-based, but our human nature wants us to believe it's true. And we can believe in a scarcity mindset or an abundance mindset, and none of us can tell the future, so neither of us know what's going to happen. I agree with you, there's massive disruption happening and will happen over the next 5 to 10 years. I believe the future is abundant.
Mark Moss, it's been an absolute pleasure, and I've really enjoyed your enthusiasm and your positivity as well, and your abundance mindset. Thank you. It's been a great pleasure for me to host you today.
Yeah, thank you.
Enjoyed it.
Yeah.